Schulman has come into the role, and we got the numbers through from Burberry just a few moments, 50 or so minutes ago, and they didn't look hugely dissimilar to expectations. But interesting to get his comments saying that the label needs to course correct after the sales dive, Guy.
We'll get some more details in just a moment. The call will be starting any second now at Burberry with analysts, so we'll get the details off that for you. Let's talk about the opening trade. Here we go this Thursday morning. We are expecting European equities to open a little bit higher, with the exception of the FTSE 100, which actually is in the green, but not by much, as you can see, barely budging off the flat line. So I suspect we're going to be in and out of positive, negative territory on that one. The IBEX, though, is up by 0.2%. The expectation is that we're going to see 2, 3, 4% for the major markets across Europe, backing out the FTSE 100 from that, and we're already seeing it maybe challenging that initial bit of green with a little bit of red. But the CAC 40 is up. It's up by 0.4%. Critic was flagging what's going to be happening with the Amsterdam market. I don't have that on the board. We do have the DAX and the SMI. We'll wait and see what they do in just a moment. It'll be interesting to see what happens with Siemens at the get-go this morning, Chrissy.
Yeah, it's a fascinating one. I'll answer that. We are still waiting for the index level on the Amsterdam index to open, but broadly, it's ASML that's behind the screen on the screen. You're seeing it in the stock 600, for example, the biggest index contribution to the upside, higher by about 3% on that initial stock, and taking with it the entire tech complex. On the FTSE 100, to you guys' point, Anna, it is not the exact same story. Commodities seem to be on the back foot today, and that's showing up in the underperformance.
Yeah, we saw iron ore prices down by 1.9%, I think, towards the end of the Asia trading session, and that can quite obviously have an impact on those basic resource stocks. So we certainly do see some of that. But technology, yeah, absolutely right to focus there, because that does seem to be the best performing sector, and by a little margin, up by 1% or so this morning. In terms of the other stocks that we're focused on then, so ASML is one of those gainers, up by 2.5% this morning. We also have Equinor trading higher. Guy, you were mentioning this one earlier on. That stock is up by 2.5%. We're waiting to see what we get from some of the other companies that we talked about. In fact, Burberry, waiting to see what we get there. So we'll bring an opening price on Burberry shortly.
Energy stocks broadly are, though, higher. So you've got Total up, BP is up. I think Shell goes ex-dividend today. Just that's one's at the back of my brain in terms of maybe the fact that that could be why it's not on the list that I'm seeing in front of me. But the energy complex broadly does seem to be higher, which is interesting in the light of the fact that we are seeing the miners a little softer this morning. But LVMH is soft this morning. It's down by 1%. It is the leading point drop on the stock 600. But there are some miners in there. But the pharma sector as well, seeing some signs of weakness. Roche, Sanofi, AstraZeneca, all soft as well. I think GSK might go XD
too. Yeah, you're correct. GSK and Shell and Sainsbury's.
Excellent.
We should mention that Bayer is also taking a pretty big beating today, down about 2 to 3%, and it was on top of yesterday's numbers as well. This is some continuation of weakness there. They'd cut their earnings target yesterday, posted a net loss in their agricultural weakness story. So as well, that's going to be one we're going to keep an eye on. We're going to talk about how this index is going to go broadly, though. Are we still in this economic resilience narrative out of the United States, or are the tides changing? We spoke to that very topic about Deutsche Bank's Henry Allen. Take a listen to what he had to say.
I think the US is still the best bet in terms of where things are going next. You know, the US is still the best bet. It's just on a relative basis, you're not necessarily going to see the relentless rally that we have for the last couple of years.
So,
joining us now is Madeline Ronner, portfolio manager at the global equities team over at DWS. Madeline, a pleasure to have you on the program. Thank you as always for joining us. Look, the narrative continues to be kind of a tale of two camps, really. I mean, this feels like a tale of all the time, bulls versus the bears. But the idea that there might be some sort of sentiment change, that the U.S. is no longer the place to be, do you agree with that? Is that the sentiment in your view?
I mean, honestly, like with Trump, with the Trump election happening last week, and with that also being such a clear sweep and him having such a strong mandate now, so we expect tariffs to happen pretty early on in his presidency. Obviously, we all know that he can do that like off the bat. So obviously that's going to be a problem for export-oriented Europe, right? And if you just look at the history, like usually. When the first day after the election is a positive for the S&P 500, usually it goes up in the 2 weeks after. So we strongly expect actually the US to be kind of still the place to be, at least until year end. We still like European stocks generally for next year. I mean, there are some good reasons too, like the stronger dollar will help EPS growth generally. You still have the valuation discount, so it's important to watch what the 10-year yields are doing in the US, because if they get too high, the valuation of the US equity market could get problematic, and we saw that also in the tape on Thursday, on Friday, last week. And that could play in favor of European stocks, who are obviously much cheaper, even on a sector adjusted basis. But generally, especially until the end of this week, going into a year-end rally, US will likely, in our view, remain the place to be.
Madeline, you mentioned the rates picture as well. Give us an upper bound here on the 10-year that you may actually see the stock market have far more sensitivity to. At one point in the last couple of years, it was 5%. Every time the yield hit 5%, the stock market dropped. Is 5% still going to play that role?
I think so, yes. So if we would see 5%, I would expect especially the US equity market to react to that. We think a large portion of the Trump trade and also the deficit is likely has been priced in before, right? In 2016, it was a large surprise that he got elected. This time, not so much. So the rates already went up in anticipation on the election. But we will still likely see some upwards pressure there. So that's going to continue to be a watch item for us. If it approaches the 5%, we would surely expect that to have a negative impact on equity markets. But let's see if it even goes there, right? I mean, we had the inflation print yesterday, so that was in line. That gave the Fed room to cut in December again. It comforted markets, so item to watch. But yeah, surely the 5% would become an issue.
Madeline, let's just talk a little bit about catalysts and what could be a catalyst. Is there a catalyst for Europe? Is there an obvious one? What could it be? Everybody I talk to seems to just think that you want to go to the United States, and that seems to be the logical trade right now, and it certainly has been. Is there any reason to buy Europe?
I feel like, for example, if you look at Germany, the DAX has been faring quite well, especially regards to the export-oriented nature of the German economy. But it has been doing quite well because obviously we are getting a new government, likely in February next year. There has been a lot of indecisiveness around that. We have the strong view that the German government has been spending way too little compared especially to other Western economies. So if that would start to pick up and we would really get a large majority there that could really achieve new policy items, I feel like at least for the German stock market that could be a trigger. Otherwise, we'll have to see if some valuations pops up in the US. Yeah.
Are valuations important? It feels like they're being downgraded at the moment. People talk about many reasons why you want to own equity markets at the moment. Traditionally, you talk about valuations. I just don't hear valuations being talked about a great deal. Are they still important?
I feel like something needs to happen for valuations to be important again, right? So either like the 10 years have to go up, you would have to see some kind of inflation reigniting. And obviously Trump's policies will be inflationary, but that takes some time, right? So you will not see that right away. And I feel like the Fed, I mean, they said, okay, they're not going to react to the Trump election right away, but at some point they're going to have to, because simply it will lead to higher inflation longer term. Inflation pressure will go up. And if something like that happens, that could lead to valuations mattering more again.
Madeline. Yeah, sorry, I think you froze briefly, but you're back, so that's good. We'll persist and hope that the connection it remains stable or becomes stable. Let me ask you about Germany. Guy was asking about the European broader story, but on Germany, you say in your notes ahead of our conversation that a US tariff on German imports would deduct some 0.2 percentage points from German GDP. Is that the sum total of the impact on the German economy, or does that have ripple effects through the German economy that we can't that aren't being picked up by the scale of that number? Because that seems really small. It seems like something, well, you maybe don't worry about then.
Yeah, so that would be like only the direct effect that our economists estimate. Obviously, there could be some more ripple effects, or there will likely be more ripple effects. So the impact, I agree with you, would likely be larger than that.
Would likely be larger, okay, and so I guess partly that will be determined by the types of tariffs and the extent of them. So we'll maybe leave that maths task for later. What about sticking with Germany and the perspective there? What's the investment community looking to the German government to do, whatever the German government looks like come February? Is it all about the debt brake, or is the debt brake, changing the debt brake, a necessary but not sufficient part of what we need to see in Germany, or maybe not even necessary and other things are required?
I think so. It's definitely a part of what is necessary. Without the debt brake changing, I don't think we will see an acceleration in growth. And you see that clearly if you map basically the spending that other economies did during and after COVID, and that Germany did, and we're all lowest. So I feel like that's definitely something that needs to happen. I think we can all agree, and that's also the investor sentiment, that this will alone not be enough. So you need structural change with that too. So you need to do something about the energy costs, which have obviously in the US declined since pre-COVID and increased in Europe, in the UK as well, and in Germany too. So that needs to be addressed for sure. And lastly, also the bureaucracy. Right, so easier processes and just also a more clearer direction from the government, so companies can feel more comfortable in where to invest.
I also wonder what euro-dollar at parity and maybe lower taxes, going from 30% to maybe down to 25% corporate taxes, could do to the German corporate outlook. Madeleine, thank you very much indeed. Greatly appreciated. Madeleine Rohner, Portfolio Manager on the Global Equities team at DWS. Core 6 looks like this morning. There's some significant stocks that are worth watching out for. We are seeing a big pop higher in Burberry, but what you're not getting is that similar pop in LVMH. Got a new CFO at that business. The stock is down this morning, as you can see. Elsewhere, Novo soft, the drug sector is broadly soft this morning. Nestle is a little soft this morning, but Ferrari's up. And when it comes to the kind of the AI trade, look at what's happening with Siemens. Look at what is happening with ASML this morning. Schneider's up 0.7% as well. There's a bunch of stocks this morning that are pricing in that grids network connection story, and it's interesting to see how strong that is. But ASML up very nicely this morning. Big points gain for the stock 600. Let's deal with some individual companies on a more granular level. Joe Easton's got the details.
So I want to start in the Italian banking space, Guy, because we are seeing a lot of action in this market this morning. Remember, last night we had that breaking news that the Italian government was offloading around 15% of Banca Monte dei Paschi over in Tuscany, and that stock gaining around 9%, even though there was a slight discount on the share placing. The thing that's moving it is the speculation that this could potentially lead to an eventual takeover of the Italian lender, as the Italian government is looking to fully exit the stake. Banco BPM, BAMI, picked up around 5% of the stock, and Anima Holdings, which is an asset manager, also picked up some shares. There is a JPM note saying BPM will eventually bid for Paschi maybe within the next year, according to analysts. That's driving those stocks at the moment. Then Siemens, this was a nice gain. As we've been discussing, it is due to mostly their data center focus, so really leaning into that AI trade, as Guy was mentioning a moment ago. That is making up for losses, continued losses in automated factories, which has been really hit by a slowdown over in China. But we can see a very nice gain for that one for Siemens, up almost 6% at the moment. Then Burberry, this is another big gainer. Finally, a bit of positivity for the long-suffering Burberry investors. Remember, the stock down 70% over the past couple of years. They're warning of 35% sales drops over the next year, but the stock's up 8%, just telling you that all this bad news probably now priced into the market, therefore getting a bit of a rebound finally on Burberry today. Then over in renewables, one stock not getting a rebound is SMA Solar over over in Germany, warning of weakness in solar panels sold into residential buildings. So this is a European-based company, does Germany, but also other countries as well. A warning last night, further declines in sales, and that stock getting slammed today, down 20% almost at the moment. And then finally, in the auto space, breaking news coming out of Volvo this morning. This is Volvo Cars announcing the sale of their stake in Link. This is a company that's joint owned with Geely over in China. They're announcing a sale of that, exiting that, as I say, and the stock is gaining 3% over in Stockholm. Bit of positivity in autos this morning.
Okay, yeah, some really fascinating individual corporate stories. We're getting further lines coming through on Burberry as they have that host that call with journalists. So we'll get back to that story. We'll also talk about what's going on in Germany at a political level and at the corporate level. Coming up, the German Conservative leader Friedrich Merz has launched his election bid with a stinging attack on Chancellor Olaf Scholz. We'll get the details of that next, and of all of these earnings stories that are coming through this morning. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Or other authorities
could face bigger challenges.
It was going to keep rain World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
And that is why I will request a vote of confidence on December 11th, so that the Parliament can decide on it on December 16th. And that is the basis for the elections in Germany, so that the citizens can say how things should continue in this country. You are dividing the country. Mr. Chancellor, you are the one responsible for this controversy and for this division in Germany. This is simply no way to govern a country.
German Chancellor Olaf Scholz and CDU opposition leader Friedrich Merz speaking there in the Bundestag yesterday. We're getting an early indication as to what this election campaign is likely to look like. Let's get more on this unfolding political story. Oliver Crook joins us out of Berlin. Set it up for us, Ollie. What do we get yesterday? It was a tough day in the office for Olaf Scholz, certainly at the Bundestag.
Yeah, you could certainly say that, Guy. It was really very tough for him. I mean, he had to speak before Parliament and then just basically get lambasted by Friedrich Merz and a number of others, and really each of them setting out their stakes and kind of where their positions are going into this election campaign. I mean, maybe almost the official kickoff of the election campaign. And what Olaf Scholz did is he stuck to the things that he's done in the past, basically saying that you do not need to choose. Germany does not need to choose, does not need to trade off between having investments into companies and investment in infrastructure, investment in security, investment in good jobs, investment in pensions, investment in defense. These are two things that are not mutually exclusive, and that Germany needs to do both of these things all at once, which is why one of the many reasons he's in favor of releasing the debt brake. He also sort of put out his position on Ukraine and tried to really spin his reticence to give more support to Ukraine in terms of the permissions to strike deep within Russia, saying that he is a chancellor that will not escalate the conflict, and this is very important. Those are all positions that are in very sharp contrast to Friedrich Merz, who is very open to cutting things back in the social welfare state, has spoken for a long time about the need for Ukraine to be able to strike within Russia. But Friedrich Merz also said that he will not be basically joining Olaf Scholz and the SPD on any legislation, basically. So you're going to get a couple more lost months arguably, that really Germany needs for its economic recovery and direction politically.
And so, Ollie, the issue then that hangs around German politics, the big question, you've mentioned it, the debt brake already. I mean, is there any realistic expectation that that brake is released? We get quite mixed views around this desk, I have to say, about the importance of that, or the to what extent that is integral to the change that's required in Germany.
Yeah, I mean, absolutely. I mean, your last guest just saying that it actually is a fundamental part. I mean, listen, Robert Habeck, the economy minister from the Greens, has likened it to sort of boxing with your arms tied behind your back, not just because of the difficulties that Germany has on its own economy, but because the rest of the world is debt financing all of their issues away, whether it's the United States. Obviously, China takes a very active hand in their economy. For Germany, though, there's this sort of generational trauma. There were months in the Weimar Republic where inflation reached 30,000%. We're talking about basically 1,000% inflation every single day, which is why they have added it here, the debt brake to the Constitution. It is sort of Article 115, where you cannot, borrow in excess of 3.5% of GDP. What is interesting is we're starting to see a shift on that, potentially from Friedrich Merz. He was speaking the other day saying that, of course, the debt brake can be reformed. The question is, why and for what purpose, which I'll leave you with the sort of irony of the sort of political situation that we're now facing in Germany, where you had a left-leaning socialist government that fell apart because a finance minister refused to reform the debt brake in order to basically elect a right-leaning government that has always been sort of very sort of faithful to the debt brake, and maybe it'll change under them.
Some people carry around a Bible. Bloomberg's Oliver Crook carries around the German Constitution. We thank you so much for breaking it down for us.
My second favorite
Berlin,
Constitution.
of course, keeping one eye. His second favorite Constitution. He says, well, we got an eye, of course, on German stocks. We also got our eye on ASML shares, those rising after the chip machine maker maintains its bullish 2030 outlook as it bets on an AI-driven boom. Let's get to Bloomberg's Charlotte Hugh Morgan for more. Pleasure to have you back around the table. Charlotte, walk us through the details of the outlook.
That's right, Kriti. So today, ASML is holding an investor day, and this morning they announced that they were keeping their 2030 sales outlook unchanged at 44 billion euros to 60 billion euros. They also pledged to return lots of capital to shareholders in the form of dividends and share buybacks. And this is a kind of important bullish signal to the market, because ASML shares, as we know, have been under pressure recently. Just last month, they cut their guidance for 2025, and third quarter bookings also came in under analyst estimates. So this is them saying, okay, long term, the outlook is rosy.
In terms of what is going to drive that, they're pushing the AI trade this morning. They're making it very clear that this is the long-term trajectory. Isn't that already in the price?
Yes, to an extent, but I think they're reiterating that. What they're saying is, it is all about AI. We're seeing some market weakness next year, that hence the 2025 guidance cut. But in the long term, they're saying, the demand for our chip-making machines. And of course, it's important to remember, ASML is really a bellwether for chip makers globally. Yeah. It makes the type of advanced lithography machines that they're the only people that make them, and the likes of TSMC need them to create the semiconductors that power AI and AI growth. So they're saying, look, they're doubling down, and they're saying, yes, long term demand is strong. AI is going to keep growing.
That's the future, they say. Charlotte, thank you very much. Being back, Charlotte Hughes-Morgan with the latest on ASML. We go quickly to another corporate news story, team, this morning, which is the Burberry story, and incredible moves in the Burberry share price. It's not what it used to be, but it's up by 11% this morning, and we've got the conference call, the call taking place, the management talking to journalists, certainly talking to reporters, talking about the Chinese customer will eventually come back, believes that current China trends are cyclical, which is interesting. And this is a new CEO, and there's a lot on his plate in terms of turning this business around. If we look at a longer-term share price chart of this business up against some of the other luxury names, you can see that, yes, they've all been victims to the same fallback in Chinese consumer demand, but not to the extent that Burberry has been, and other negativities around the business. Did they misstep on pricing, on the actual range? Should they retreat back into the outerwear region?
That's where the CEO is saying they have the greatest potential. Outerwear is where the strength lies. He's also talking about bags under 2,000 euros being the kind of the area in which they would focus. That seems to definitely be a step back into the idea that Burberry needs to be a more affordable. It has maybe pushed its pricing too far. Certainly seems to be the suggestion, but he's sounding quite positive. Like, I guess he probably has to be. He's just come into the company, so he can't exactly sound too downbeat.
Yeah.
But he does sound quite positive. But it does feel as if there is a little bit of a reset going on here in terms of where Burberry is pitching itself.
Well, I thought it's interesting that he's not making any comments on the M&A at all, especially because Andrea Felstead, our Bloomberg Opinion columnist this week, had said that if not Moncler, Tapestry might be another major kind of player to look at Burberry as well, simply because that idea of kind of mass marketing and mass consumerism is a little bit of the American playbook there, and that's where Tapestry has, one, lost value, but two, excelled.
Right, yes, and so maybe Burberry got ahead of itself, got over its skis in terms of pricing, and he does seem to be saying some of the things that the market was looking for this morning around pricing and around that focus on outerwear. And I guess, if that's what investors were looking for, if they'd all read the previews, if they'd all been reading the same analyst notes, then that's what they would have been looking for. So that's certainly one we're focused on, and that stock up by, as we said, 11% this morning.
There is a strong AI theme. Let's take it back to SML maybe this morning. There does seem to be a strong AI theme running through what we're seeing today. So Siemens is certainly one of those stories. We've seen it over the last couple of days. Anybody that seems to have a sort of network connection, grid, energy connection business seems to be doing really quite well. FH this morning is another company that's doing quite well in that space. Siemens was there yesterday. Siemens Energy was talking about it as well yesterday. Their gas business is doing very well. That does seem to be maybe where Europe, it doesn't have the NVIDIA, but it does have the bits that feed NVIDIA.
We talked about Siemens Energy yesterday, Chrissy, and there we've got a business that's been, has been beaten up and has the potential to be beaten up again by another Trump administration because of wind power and exposure to that. But to Guy's point, if you manage to pivot the business and it's very much more about data centers and connectivity, then maybe the market looks to that and not to the wind fragility.
Oliver Crook made a really interesting point, which is that this week, in just the last 5 days, you actually made more money on Siemens than you did on Bitcoin in terms of the volatility. I thought that was fairly interesting.
Certainly a theme that we'll continue to focus in on. Let me tell you what's coming up on the programme. Don't miss our exclusive conversation with Stefan Bujner, the CEO of Euronext. We will talk there about what another Trump era will mean for Europe. What does it mean for listings of European businesses, European growth? How much will that be on the back foot as a result of Trump's policies? And what will that mean for the listing environment in Europe? We'll talk about that. We've also got other things to discuss around regulation as well. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but we can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never. Go.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington. It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Morning, folks. This is the opening trade. We're 30 minutes into today's session. This is what the equity story looks like here in Europe. Broadly higher, with the exception, as you can see, of London, where commodity stocks are acting as a little bit of a drag. Actually, some of the healthcare stocks are also maybe giving back some ground too. Let's talk about what is happening with Euronext. At the centre, you could argue, of the European equity story. The company recently unveiling a €300 million stock buyback as part of a new 3-year strategic plan, which is designed to accelerate revenue and earnings growth. The exchange operator's CEO is, of course, Stefan Bujner. He joins us now for an exclusive conversation. Stefan, great to have you on the show. Look, the question we're asking everybody at the moment, and it'll be interesting to see how your strategic plan fits into this, how does a Trump presidency affect Euronext?
Too early to tell. The only certainty with a Trump administration is that we are entering into an era of uninhibited decisions. Inhibition creates unpredictability, and unpredictability creates volatility. So for the moment, we are seeing the volatility aspect of the Trump administration. But you may have noticed that appointments, nominations in the field of economics are still to come. And you may have noticed, too, that we don't know what will be the gap between what he has promised to deliver and what he will deliver. You may have noticed, too, that we don't know how his tax reduction plan will translate into deficit, how much the deficit will translate into debt, and how much of this incremental debt will translate into inflation. So too early to tell fundamentally. One only thing which is sure is we are getting into times of uninhibited decisions.
Okay, so we're going to get more volatility, which in theory you could argue is good for an exchange. We are, though, already seeing European stocks once again lagging the United States. Since he's been elected president, US stocks have taken off, European stocks have lagged. Does it just once again speak to the idea that companies want to list in the United States, that investors want to invest in the United States rather than Europe? Is he only going to enhance that gap that exists across the Atlantic?
No, it doesn't tell anything about where companies want to list. It tells about the level of valuations in the US versus the level of valuation in Europe, which is a totally different concept. companies that want to list in Europe, by the way, want to list on Euronext. You may have noticed that Euronext today is a market which is integrated and twice bigger than the London equity market. It's a market where we trade 10 to 12 billion average daily volumes in equities, so twice the size of the London equity markets. Also, in terms of aggregate market capitalizations, we have an aggregate market capitalization of companies listed on Euronext of 7 trillion euro. So when international companies want to list in Europe, they list on Euronext, and we don't have a flow of international companies leaving European markets, continental European markets, to the US. There is a situation which is specific to the UK, with an exodus of UK-listed companies to the US, but that's a totally different situation that is driven by pure London factors and that are different from the rest of Europe.
Can I ask you about listings in Europe a little more then, Stéphane? Good morning. There have been hopes in the French market, for example, that the likes of BlaBlaCar or Dr. Blib might come to the market. You probably don't want to comment specifically on those names, but does it seem to you that the environment for listings in France is a positive one, given global uncertainties, given domestic political uncertainties?
Yeah, first of all, in Europe, in Euronext markets, we have a single integrated liquidity pool, a single integrated order book, a single integrated technology platform. There is no Paris market, there is no Amsterdam market, there is no Milan market, etc. There is a single integrated pan-European market under the helm of Euronext. So these
but there is Paris
that you
politics.
are referring to are important. Yeah, there are Paris politics, but if either you refer to Paris politics and taxation, etc., or you refer to listing. If you go to listing, what my point is that there is a European listing platform with European liquidity. The liquidity on this single European market is much bigger than anywhere else in Europe and anywhere else in the UK, and that's for the listing plan. Now, if you ask me what are the impact of local taxation debates in France, that's a totally different question. I'm not sure there is any connection between the plans of the companies you have mentioned and the current debate about the budget, which, by the way, the dust is going to settle because in our constitutional system in France, and I'm just referring to the French, but which is a small part of the Euronext market. For the French part, I mean, the system is going to be fixed in the coming weeks. The budget bill is at the Senate now, and then it will be submitted to the Parliament again in a very, very stable manner. So we should not overinterpret the volatility that may have existed for a few weeks in parliamentary debates in France.
Stéphane, let's get to the really exciting stuff here, and that is the consolidated tape. Guys making fun of me, but I'm obsessed with this story simply because it's so crucial to some of the commentary that's been happening in the EU and certainly in the Draghi report as well. Stéphane, you have your hesitations on the consolidated tape, and as we get closer to June of 2025, which I believe is when it's meant to be initially kind of set into motion out of ESMA, walk us through some of those concerns.
I'm glad you are excited by the consolidated tape concept. It's a fascinating approach of an aspect of European regulation, which is very innovative in many ways. As you know, the level 1 regulation enacted by the Parliament, the European Parliament, provides for a real-time, anonymized level 1 consolidated tape, which is a new concept. Various consortiums are being put in place to bid for being the operator of this interesting new innovative concept. And the process will start in 25 and probably for delivery by the end of 26. So let's see where we are when this consolidated tape comes to light. But I would encourage everyone to remain very cautious about what it means for real and the implications for real of this creative concept.
Stéphane, you've made the comment in the past that a pre-trade consolidated tape could endanger some of the retail trading involved in the Euronext. Walk us through what that looks like. Is there really enough retail investment in the exchange for that to be threatened?
There is a growing participation of retail investments, and we want to encourage retail participation in exchanges in Europe in particular. You know, one of the main differences between the US and Europe is that in the US, retail represents 30% of any order book, 3.0, and in Europe it represents 3 to 5%. It is increasing. We want retail to participate more. There is this trend that has started, and we want it to be encouraged. We believe that a full consolidated tape would create a situation where insiders would have access to good prices, and retail investors will get the leftovers in terms of spreads. So we don't like it, and that's why we believe that an order book, a transparent order book, is the best place for retail to contribute to the market and to benefit from the market.
Stefan, you made the comparison to the United States, but in the United States, where retail activity, to your point, has been increasing pretty substantially, a consolidated tape is part of that, simply because some of the platforms like Robinhood, among many, many others, have access to some of that pricing as well. Does that not apply in Europe?
It does not. It does not, and we have embarked, all of us, investors, market infrastructures, issuers, into somehow coordinated efforts to bring more retail investors to the market in a European way. And the big issue for retail now is how to make sure that we beef up in the countries where we don't have pension funds and incentives for retail investors to invest more through either retail brokers or to long-term investment through pension funds. And that's really what matters, much more than a tool like a consolidated tape, which is creating a massive unbalance between the happy few who are close to latency and the retail investors. So that's why we want to address the issues in a different way in Europe.
Stefan, what do you think of the idea that Europe is making progress when it comes to a single financial market, to cross-border takeovers in banks? We're seeing one potential deal going through, but maybe it doesn't go through because the Italians and the Germans don't see eye to eye. Where is progress being made? Is it at exchange level? Is it a consolidated tape? Where is progress?
Let's park the consolidated tape issue, which is not really the material transformation that anyone could expect. Let's focus on consolidation. I mean, a few companies have been consolidating. I mean, Euronext is an example of that. I mean, a few years ago, everyone was saying LSE did not manage to merge with Deutsche Börse. Hence, cross-border consolidation in Europe is impossible. And since that failed merger, Euronext bought the Irish Stock Exchange in 2018, the Oslo Börse in 2019, a CSD of Copenhagen in 20, and the Borsa Italiana in 21. So consolidation is possible, and in market infrastructure. In banks, as you know, the debate is not so much the surface of things, which is the political sensitivities, but whether or not prudential ratios, so liquidity ratios, capital requirements make sense in terms of creating large financial institutions. Things are going to change. I want to insist on that point. The type of regulatory environment we have been used to in Europe in terms of prudential ratios, in terms of regulations of banks, in terms of antitrust control are going to change in the coming years. The commitment of the new Commission, the commitments of the leaders at the European Council is clear. We are in an era where Europeans are not going to watch desynchronization and divergence in the US and in the UK and do nothing. So there will be a new effort on competitiveness, and consolidation will start now. Here and there might be some sensitivities at the political level. They are definitely the surface of things, and these consolidations will go through without going to any specific case. Will go through because the environment for consolidation will be different and more flexible to accommodate the build-up of strategic, autonomous, strong European institutions in large asset management players, with large investment banks, with large market infrastructures, and that's the direction of travel for the months to come.
Let's hope so. We've been waiting a long time. Euronext CEO Stefan Boujnah joining us. Thank you very much indeed, sir. So the consolidated tape, do you get the impression that it's coming soon as a result of that conversation?
Maybe not from Stéphane Bouchenant's perspective, but there have been folks that have entered, to his point, into that race. And ESMA will, I believe there's an introductory phase 1 in January, and then that final approval in June. The reason that this matters, and specifically for the context of the Euronext exchange, is how it incentivizes institutional flows or retail flows. We've had this conversation in the United States in terms of how much retail flows are changing the entire market. From that conversation, it feels like Stéphane Bouchenant might be more interested in attracting the retail flows over the institutional flows, but of course the institutional players lobbying for that consolidated tape.
Yeah, I've been trying to ask lots of guests recently whether Bitcoin is a threat to retail trading generally. But I mean, you know, we can talk about the market infrastructure as well. But that seems to be on people's minds as we think about another Trump presidency, and takes us on to our next conversation.
We're not talking about that anymore. We'll talk about Bitcoin next. I suspect the critic wants to talk more about the consolidated tape. That will be coming up in a program very shortly, I can assure you. Bitcoin, as Anna says, hitting a new record. I think we're north of 90 this morning. The Trump rally resumes. More on the moves next. This is Bloomberg.
Suppose I want to buy a computer, but I want to have AI in my computer. I want to be really up to date. Do you have AI in your computers yet?
No, not yet, but it's coming soon. And we think this is going to be one of the largest transformations in the PC industry in decades. What will be possible starting this summer is to run large language models in AI PCs, which means that what today all of us are doing in the cloud, where you use any of the applications that you can, you will be able to do it locally. And what this means, which is why we think this is important, is it will be much better from a cost perspective, because running models in the cloud is expensive. It will be better from a security perspective, because you will be able to use the model with your own data locally without having to upload your data to the cloud, and you will be able to do it anywhere in the world. And also for applications where speed is important, where latency is important, you will be able to do it locally much faster. For example, in gaming, where the game needs any resource the computer have, it will be a much better model. So it's going to be a big change starting this summer.
At the same price, too?
Slightly higher price, but if we look at the increase of price versus the increase of value, not comparable.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
To stop this onslaught at lower prices, I'm pledging today that in my second term, we will eliminate a minimum of 10 old regulations for every one new regulation. We'll be able to do that quite easily, actually. And instead of attacking industries of the future, we will embrace them, including making America the world capital for crypto and Bitcoin.
President-elect Donald Trump speaking about Bitcoin in September, and it seems that the market for cryptocurrencies was listening, because the biggest cryptocurrency is now up more than 30% since Election Day on November the 5th. We're joined now by Davila Silinskita, who's Director of Digital Asset Research at Wisdom Tree. Thank you so much, Davila, for coming to talk to us. Does it make sense for Bitcoin to be up more than 30% since the Election Day? Does that meet any valuation criteria that you're looking at?
Good morning, and thank you very much for having me here today. Very, very happy to talk about this. This year has been extraordinary for Bitcoin. To begin with, we see an increasing demand from institutional clients, as now they're able to invest into Bitcoin via wrappers that make sense to them, that is, exchange-traded products. We also saw reducing supply of Bitcoin due to its fourth halving that Bitcoin went through earlier this year. The combination of continuously increasing demand and recently reduced supply created price positives for Bitcoin. And now it also has strong US election tailwinds because of the promises that Trump made during his candidacy.
Yes, indeed, and so that's something that has pushed the price of Bitcoin up really substantially, as we mentioned. I wonder if we think about the different dynamics, the things that might drive the price higher. There's a lot of people talking about whether we're going to see the creation of a government-owned Bitcoin reserve, and I wonder how much that matters. We caught up with Mike Novogratz, the CEO and founder of Galaxy Digital. Let's just have a listen to what he had to say.
I don't necessarily think the dollar needs anything to back it up. To need to back up the reserve currency is counterintuitive. And so, again, listen, if we get the Bitcoin reserve, and as a guy that owns a lot of Bitcoin, I will not cry. And if you see me crying, there'll be crocodile tears. I think Bitcoin heads to 500,000.
Okay, there's a couple of things to unpack there. He's not too worried about whether we get this Bitcoin, the government-owned Bitcoin reserve. He also thinks it goes to 500,000. But let's deal with the reserve first. The government-owned Bitcoin reserve. Does that matter, Davila?
It would be very, very positive for Bitcoin price. Of course, this is also one of the promises that was made over the past few weeks, and we will have to see how many of Donald Trump's promises can actually be implemented. So investors for now should expect volatility in Bitcoin price until there is more certainty.
Let's just talk a little bit about what is happening here. Isn't Bitcoin just the high beta play on the Trump trade, and it's not really got anything to do with fundamentals? Is this more about vibes than vision?
Bitcoin has very strong fundamentals as store of value. One of the items that is becoming more and more visible is Trump's tariffs and government spending is likely to lead to increased inflation. And Bitcoin as a store of value has a great promise to Bitcoin investors, because they'll be able to benefit from Bitcoin appreciating in price as inflation potentially takes hold.
Davila, a final question to you. Let's talk to us a little bit about the mining infrastructure as well. So much of that feels tied to energy and specifically the grid infrastructure in the States. What does that look like? What does supply of Bitcoin look like?
Bitcoin mining is the essential component of Bitcoin as investment vehicle, because Bitcoin mining is a clear and visible to everybody way of Bitcoin supply. Bitcoin miners themselves are based all around the world, and they tend to tap into the energy sources that are cheaper and more abundant. But Bitcoin mining, the frequency of new Bitcoins being issued as blocks are confirmed, is very, very visible to every single investor who is accessing Bitcoin. And recently, this was reduced from just over 6 Bitcoins per mined block to just over 3 Bitcoins per mined blocks. So Bitcoin supply has reduced significantly. And in the past, this has led to significant price appreciations. After the fourth Bitcoin mining, we have not seen that type of price appreciation, as the impact on the change in supply was slightly smaller than what we have seen during the first three halvings. But this lagged impact on Bitcoin price is expected to show itself over the coming weeks.
Davila, we will leave the conversation there. Davila Silskita there, Director of Digital Assets Research over at Wisdom Tree, walking us through some of the dynamics over in crypto as well. We'll see if that rally continues. We are looking at the moment at a 90,000, just on the cusp of 91,000 for the Bitcoin price. Let's talk about what else we've got going on throughout the rest of the day. The next 24 hours, 1:30 p.m. UK time, some economic data out of the States to watch out for. US PPI plus jobless claims as well. Then just 6.5 hours later, we've got the Mexico rate decision. You want to keep an eye on the peso here. It's really taking a beating as part of the carry trade as well, given the moves we're seeing in the yen. Certainly a little bit of volatility there. Plus, then all eyes on, I think, what are maybe the stars of the U.S. and the U.K. at the moment. Powell at 8 p.m. speaking on economic outlook, and then Rachel Reeves speaking at Mansion House later today as well.
Let's talk about Powell. Valerie Sartel sitting around the table with us. The market basically is still pricing in December. Swaps markets moved to about 80%, but beyond that, it looks really uncertain. Is he in a position now that he can give us any clarity as to what happens at the beginning of next year? And is that what the market is going to be looking for? Or is it just that 80%? Can I price that in with a degree of certainty?
Well, look, Guy, not only is he going to say that they're data dependent, but they now are going to be policy dependent out of what we get from the new Trump administration. And he's said that he doesn't want to speculate. But today, you know, there is going to be Q&A after his speech, and he might get some questions where, you know, he could speak a bit more freely about how he's viewing the December policy decision. It's notable that he's speaking after we get the PPI data, so he'll have a good gauge on where PCE is headed this month, and maybe he'll want to give a hint to the market that a December cut is on the table. Perhaps that would take some heat off of him from the Trump administration. We also expect him, you know, to maybe get asked a question on Federal Reserve independence and how he's feeling with dealing with a new administration who seems to be a little bit more involved when it comes to the monetary policy decisions.
Yeah, it does seem as if that is a part of the relationship with the Trump administration that he will talk about, even though he doesn't seem to want to talk about any of the policy possibilities. So what is the market watching here, Valerie? Because does any of the Fed commentary really matter if they're not going to engage? And we understand why. But if they're not going to be jumping at shadows and not going to be engaging in conversations about what Trump might do, is the market listening?
Yeah, it's very complicated for the market right now. Do we care more about Powell, or do we care more about the cabinet makeup that the new Trump administration is putting together? And if you put all that together, you know, the first thing that I think the market is really touchy about is tariffs, because the Trump administration does not need any okay from Congress to pass measures when it comes to tariffs. But even in that, you have to think about the more lasting implication for inflation is not just the tariffs, Anna, but do we get retaliatory tariffs? So again, this narrative over are Trump's policies inflationary, it might all be down to what policy he decides to attack first. Is it going to be tariffs, or is it going to be deregulation and tax cuts? One which would be negative to growth, another which would be positive to growth. Is he going to perhaps push forward more of this energy policy, deregulation of the energy policy, which could bring oil prices down and perhaps push a more deflationary impulse into the U.S. economy? Which one is he going to attack first? And it's still very much up in the air to that effect.
Certainly something we're keeping a very close eye on. Valerie Titel there joining us around the table, talking a little about that dynamic between the executive branch and the Federal Reserve as well. Coming up later today, you don't want to miss our interview with JP Morgan CEO Jamie Dimon. That coming up at about 7:30 p.m. UK time. Imagine everything Valerie just laid out will certainly be fair game for that conversation. Our very own Lisa Abramowitz conducting that interview. In the meantime, markets mostly green on the screen. Stick with us. It does it for the opening trade. Pulse is up next. This is Bloomberg.
We'll show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Is this the best time ever to be starting a technology company?
Let's at least say it's the best time yet.
Yeah.
Hopefully there'll be even better times in the future. I sort of think with each successive major technological revolution, you've been able to do more than you could before. And I would expect the companies to be more amazing and impactful and everything else. So yeah, I think it's the best time yet. Big companies have the edge when things are like moving slowly and not that dynamic. And then when something like this or mobile or the internet or the semiconductor revolution happens, or probably like back in the days of the Industrial Revolution, that was when upstarts had their edge. So yeah, this is like, and it's been a while since we've had one of these, so this is like pretty exciting.
In the essay, you actually say a really big thing, which is ASI, superintelligence, is actually thousands of days away.
Maybe. I mean, that's our hope, our guess, whatever. But that's a very wild statement.
Yeah. Tell us about it. I mean, that's big. That is really big.
I can see a path where the work we are doing just keeps compounding, and the rate of progress we've made over the last 3 years continues for the next 3 or 6 or 9 or whatever. 9 years would be like 3,500 days or whatever. If we can keep this rate of improvement or even increase it, like that system will be quite capable of doing a lot of things. I think already, even a system like O1 is capable of doing like quite a lot of things from just like a raw cognitive IQ on a closed-end, well-defined task in a certain area. I'm like, O1 is like a very smart thing. And I think we're nowhere near the limit of progress.
I mean, that was an architecture shift that sort of unlocked a lot. And what I'm sort of hearing is that these things are going to compound.
We could hit some like unexpected wall, or we could be missing something, but it looks to us like there's a lot of compounding in front of us still to happen.
I mean, this essay is probably the most techno-optimist of almost anything I've seen out there. Some of the things we get to look forward to, fixing the climate, establishing a space colony, the discovery of all of physics, near limitless intelligence, and abundant energy.
I do think all of those things, and probably a lot more we can't even imagine, are maybe not that far away. And I think it's like tremendously exciting that we can talk about this even semi-seriously now. One of the things that I always have loved most about YC is it encourages slightly implausible degrees of techno-optimism and just a belief that like, you can figure this out. And, in a world that I think is like sort of consistently telling people, this is not going to work, you can't do this thing, you can't do that. I think the kind of early PG spirit of just encouraging founders to like think a little bit bigger it is a special thing in the world.
And all the debt that could come back on the markets in the U.S. Bitcoin, look, still on a tear, 90,537, then euro-dollar 105.38. That IEA report, we'll talk about it in just a second with Toro Bozzoni. We really want to focus on what China demand looks like, but overall, they say that global oil market will face a 1 million barrel glut in 2025. So we're now joined by Toro Bozzoni, head of the oil markets division at the IEA. Toro, as always, thank you so much for giving us a little bit of your busy day and your busy schedule. Now, you see Chinese demand actually growing by just 10% of the rate seen in 2023. Could Chinese demand have already peaked?
It's possible. It's very possible. As you say, we see Chinese oil demand growing by about 140,000 barrels a day on average this year. But for the 6 months, past months, Chinese oil demand was lower than it was last year. Of course, last year was exceptional. We came out of COVID lockdowns and industrial activity really picked up. And now we're seeing this slowdown. And it's not just the economy and the shift, the slowdown in the construction sector, but it's this transition to EVs, high-speed rail, and gas in trucking that is undermining Chinese oil demand growth. So we're seeing this continuing forward. We do expect growth in the medium term in China, but much weaker rates than we've seen in the past.
Toril, if China gets their act together and actually stimulates and uses bazookas, could you be overly pessimistic about how much oil they need in the future?
Of course, we think the stimulus measures that have been put in place, it's not going to impact materially the demand growth this year. So we're pretty confident that oil demand growth in China this year will be in line with what we're expecting for the year. Of course, it could impact the demand growth next year. We do expecting Chinese oil demand growth to continue in the medium term next year and to 2030, but a shift from transportation fuels more to the petrochemical sector, and this, of course, could be impacted if the stimulus measures are impacting the economic growth in the country.
Toril, with the election of Donald Trump, how serious are concerns about a trade war, and what does that do to demand for oil?
I think it's too early to say. We're waiting. Of course, the IEA is looking forward to working with the new U.S. administration and its energy policy goals in the coming years. But I think it's too early to know the impact of any policies that have yet to be defined. But it's obviously something that we're watching very closely here at the IEA.
I mean, some of the couple of things that, we're looking out for in terms of policy is, for example, if Donald Trump were to renew his campaign to squeeze Iranian oil, is there enough oil elsewhere to fill that gap?
Of course, Iranian exports, they have increased quite significantly over the past years. And so far this year, Iranian exports are hovering around 1.5, 1.6 million barrels a day, mainly to China. And this is, of course, if sanctions were tightened and Chinese buyers would stop taking that Iranian oil. We're seeing a market that's relatively well supplied. Of course, OPEC plus countries, they have voluntary production cuts in place that they're looking to unwind. Now the producer alliance postponed the unwinding of those cuts for another month from December to January as the market looks well supplied, spare capacity in other countries. And just in generally, we're seeing oil supply growth from non-OPEC producers in the Americas, that is the US, Argentina, Canada, Guyana, and Brazil, adding more than 1 million barrels a day between them to supply both this year and next year, which on paper is enough to meet our expected demand growth of about 900,000 barrels a day this year and 1 million next year. So all in all, we see the market well supplied, even if Iranian volumes would be cut back somewhat, and it would leave the room for others to increase production.
But Toril, I mean, I guess this is a concern, right? You'll already see a 1 million barrel glut next year if OPEC plus, cancels its supply increases. What if they don't? What does that mean for barrels, and what does actually that mean for the price of oil?
Of course, if the OPEC plus alliance decides to unwind their production cuts starting in January, as they had outlined, and demand continues at the rate that we're seeing, and with no major supply disruptions from other producers in the Middle East or elsewhere in the world, we're seeing a very well supplied market, oversupplied market, and which would obviously have a negative impact on prices that would again perhaps stimulate demand growth or cut back impact on US production that is the most responsive to prices, but that's still to be seen.
Okay, Toril, thank you so much. Toril Bozzoni there, the IEA head of the Oil Markets Division. Thank you, as always, for joining us. Now, President-elect Donald Trump has shocked Washington with his decision to nominate loyalist Matt Gaetz as his attorney general. The former House Speaker, Kevin McCarthy, who Gaetz toppled last year in a rebellion by ultra-conservatives, told Bloomberg that Gaetz will not get confirmed by Congress.
I think choices are very good except one. Look, Gates won't get confirmed. Everybody knows that. But when you look at a Rubio, just the knowledge that he has, being in the Intel committee, I was on the Gang of Eight, and his understanding, even when you listen to the other side of the aisle, they say he'll make a great Secretary of State.
Well, let's bring in Bloomberg's news director for the EMEA region, Ross Matheson. Ross, so first of all, why is Gates so controversial? And I thought it was a clean sweep that he could get anyone confirmed.
Well, he is controversial. He was the subject of a DOJ investigation into whether he had a sexual relationship with a 17-year-old girl in exchange for money. He obviously denied those allegations. He was told later there would be no charges, but it was also the subject of quite a long-running House Ethics Panel investigation. His resignation now obviously removes that too, but aside from the bad blood, clearly he's got with Kevin McCarthy for obvious reasons. He was the one who led the ouster of McCarthy from his role. You know, there are a lot of Senate Republicans who are quite dubious about him, expressed concerns about this, and we don't know exactly what the confirmation process is going to be. There are all sorts of talks about how certain officials might get confirmed or not, but if he goes through a traditional confirmation process, that involves extensive grilling, obviously, in Congress. It involves, you know, an FBI background check and so on, and he's going to come under a lot of scrutiny. And the question is, does he fall under, you know, that process? Are there enough Republicans in the Senate, for example, who would support him? So this one, above all, seems to be potentially the most treacherous in terms of getting confirmed for Donald Trump. It's obviously a key position for Donald Trump. He's made his disdain for the DOJ well known over an extended period. He really wants to get in there and make significant changes to it. He also wants the DOJ driving in the same direction as him in terms of enacting his policy on border controls, for example. So he does need someone atop the DOJ who's going to do his bidding. The question is Gates going to be a bridge too far for too many Senate Republicans?
But, so, Roz, what are the checks and balances? I mean, if, you know, Donald Trump or the Republicans have the House, the Senate, and of course, the White House, who will keep them in check or you know, to balance it out?
Well, it's interesting because we haven't really been in this position for a bit of a while where you've got essentially a clean sweep of the House, the Senate, and the presidency all in one party. And they do tend to change hands as a result in the midterm elections, which are obviously already some years away. But on the surface of it, it looks really good. And Donald Trump, you know, he's got a big agenda he wants to get done through Congress pretty quickly, including on the tax side for domestic policy, energy policy, obviously, and immigration policy and more. And ostensibly, this is a good result for him, but it's not quite as clear-cut as that. The majority in the lower house is very, very thin, razor thin. You have a bunch of Republicans who probably don't support the entirety of his policy agenda. The question is, in an administration that demands total loyalty, are they willing to break ranks on policy and vote against it? At the least, it could be quite a fractious Congress. I mean, again, that's not unusual for Congress these days, but it could slow some of this down. They could drag some of these policy changes out, particularly, again, in the lower house when it comes to some of those domestic policies in particular. So it'll be interesting to see how many Republicans toe the line completely with Donald Trump on policy, or are they willing to break ranks, or are they willing to try and change or amend some of his policies? So it's not entirely, clear skies ahead for Donald Trump on that front.
Ross, thank you so much. Ross Matheson there, our news director for EMEA. Now, coming up, traders ramp up bets on a December rate cut after yesterday's CPI data. More on what officials have been saying next. And this is Bloomberg.
Start your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Politics to the world of business. Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Well, traders have boosted bets on a December Fed cut following a subdued U.S. inflation report. Neil Kashkari says he's confident that inflation is headed down towards the central bank's 2% target.
I'm not seeing a lot of upside risk yet. We don't know what's going to get enacted. I'm not seeing a lot of upside risk that inflation is going to take off from here. The bigger risk that I'd be concerned about on the inflation front is just if we're landing at around the 2.5% level instead of back down to 2% level. I think that those risks existed before the election, and I think that there continues to be uncertainty now, and we need to just take our time, let the data come to us, and let that guide us.
Well, to talk about inflation, to talk about the rate path ahead, we're now joined by Laura Cooper, Global Investment Strategist at Nuveen. Laura, always good to speak to you. It's a big week because there was a trend towards inflation going down, and now so many question marks about Trump trades, Trump tariffs, and actually what that means for inflation. Does the Fed have a very short window in which to act?
I don't think the Fed has a short window to act. I mean, I think looking at the CPI yesterday, there was enough of a deceleration to suggest that the Fed is still poised to potentially cut in December. I think the key question, though, is what happens in January. I mean, we certainly revised our recent Fed path to suspect that they're going to have a pause in January. And this is largely predicated on the fact that we are still seeing that U.S. growth exceptionalism persist. At the same time, that potentially this growth impulse coming through with a possible fiscal injection. Now, we're not going to see the Fed react to that at this juncture, but I think it certainly will be top of mind as they try to stay data dependent.
Laura, I mean, I guess the concern is, energy and goods inflation, slightly negative, food prices probably not rising as much, but services, I mean, when you look at services, salaries, of course, tend to be a particularly strong driver of prices. They remain problematic. Could that even be more problematic under some of the Trump policies?
And I think that is the key question facing policymakers, not just in the U.S., but in Europe and elsewhere. The fact that we are seeing the services inflation still quite sticky. And it is a key risk, I think, to our outlook that we could see that reacceleration of inflation next year. So looking back at what we're seeing in terms of U.S. equity markets, they're anticipating the liquidity pumps to keep coming through, whether that's through aggressive Fed easing, or if not, we see a paring back of the Fed rate cuts where they may have to stay in restrictive, then markets are pinning those expectations on tax cuts coming through. And I think the key question is now, how much of that is sustainable? If we do see the Fed have to keep rates at quite a restrictive territory for some time, valuations will come back into focus, and perhaps equity markets won't be able to continue to have the kind of upside that they have been having. But that's probably a story not until the second half of next year. In the near term, it's about kind of cyclicals, about small caps, really capturing that potential growth and inflationary impulse.
But, Laura, the data, does it definitely justify a rate cut next month?
I mean, I think we still have another payrolls print. We still have another CPI print. This is a Fed that's exceptionally data dependent. But, you know, we've heard from policymakers that they're not just data dependent, or they're not data point dependent, they're data dependent. And I think at this juncture, it's one of the reasons why we've been hesitant to take a big stance on duration, because of the uncertainty around the Fed policy path and as well the policy uncertainty. So in this kind of current period, we're probably seeing a dearth of top tier data, and yields in the U.S. 10-year are already testing kind of that 4.5% mark. I would think that at these levels, it's probably sufficient enough to start to attract some of those buyers back in to buy this dip. Certainly foreign investors de-risked ahead of the election. We're likely to see them come back into play. Positioning is lighter than before the election, and we're not going to get that kind of growth and inflationary guidepost until later when we start to see some of that policy come through. So in the near term, I think we're going to continue to see just choppy price action as investors try to read smoke signals, let's say, coming from certain cabinet appointments, and whether we are actually going to see a more hardline stance taken by the new administration.
Laura, are you, if not concerned, you know, is there a worry that the Trump trade has already played out? Because actually stocks did so well last week. We also had Bitcoin, I think it's at 90,000 at the moment, that even if certain policies that maybe are beneficial to the U.S. economy are announced and put in place, that, you know, the markets will have already ran with it.
I think that's a key question. I think how much of that reflationary trade is already in the price, and one could argue that a lot of that is looking at 10-year yields, looking at the strength of the dollar, certainly since mid-September. And I think the question now is, taking a step back, how are we actually going to position for this? In the near term, you know, it's ample opportunities in fixed income, looking at the backup in yields. And that's not necessarily just in the rate space, but looking across fixed income. Credit spreads are exceptionally tight, but you can actually get good exposure with the yield income and as well the credit spread pickup if we do see the soft landing come through. And if it's a hard landing, if we see that reacceleration of inflation, then we're actually going to get the Fed potentially aggressively easing. That plays the rates component back into play. So fixed income is quite attractive. And even looking at kind of riskier parts of fixed income, senior loans, for example, you get a yield above 8%. Investors' positioning is quite light, and it is floating rate sensitive. So it is a diversifier in portfolios. So a lot of uncertainty, but a lot of opportunities, I think, as well.
Laura, thank you so much. Laura Cooper, their global investment strategist at Nuveen, stays with us. We'll talk a little bit more about Germany. Coming up, Siemens shares surging to a record on booming demand for power-hungry data centers. We'll bring you some more of our interview with the chief executive. That's next, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
I do believe we need investment in infrastructure. Our mobility infrastructure is outdated, so we need to invest there. We have to manage our energy transition quickly because we cannot afford these high energy prices going forward. That would be the second point. The investment in the grid, for example, transmission grid, distribution grid, will be part in the future of a very high cost. So I would kind of rethink about how much expansion do we really need in order to carry forward. But we need to really reduce our energy prices going forward. The next one is investment also in our schooling system and in our education system. This is our future because Germany lives from innovation. That's where our strength is. The next one would be definitively immigration. We do need a good immigration. We need to bring people into work. And if it comes to budget, what I would do the same what I would do with the companies. Number one, yes, we have to invest. But at the same time, we have to look where you can save money, because that's not for free.
Well, Siemens shares they're hitting a record on booming demand for data centers. The company's chief executive also reflecting on the challenges facing the German economy. Now, still with us, Laura Cooper from Nuveen. Laura, when you look at Germany, I mean, some of the businesses are okay, but actually there's a lot of concern even within Europe that they will be the target and the firing line of President Trump, but also that the economy is really awash with problems. How do you play Germany right now from an investment point of view?
Well, as you mentioned, we certainly have the tariffs potentially coming through, and it's less about the impact of those implementation of tariffs, but it's really about the hit to sentiment at a time when we're already seeing quite depressed sentiment across Germany. So I think at this point, we're playing it actually through the German bond market. We can see that we've seen this rising term premium on the back of investors anticipating a greater degree of fiscal flexibility coming from a potentially new ruling coalition. In our view, that's a bit premature, because we do think there's going to be quite a number of challenges in getting that debt brake reform to come through. So at this point, looking where they're trading against a backdrop where we could see Germany slip into recession next year on the back of these tariffs, I suspect we're probably going to see greater opportunity to take on some of those Bund exposures.
Laura, thank you so much, as always, for joining us. Laura Cooper from Nuveen. A lot to talk about, so I know you'll be back very soon. Coming up, we discuss credit markets with Steve Tannenbaum, the founder of Golden Tree Asset Management. We talk credit. We, of course, talk about the Trump presidency and what that means for cash worldwide. This is Bloomberg.
in case you missed it on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Or other authorities.
Could face bigger challenges next.
It was going to keep rain World Cup.
This is a 3 as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Paris, and these are your top stories. Republicans win the U.S. House, giving Donald Trump and his party control of all 3 elected branches of government as the president-elect names more ultra-loyalists for top posts. Well, traders boost bets that the Fed will cut rates by another quarter point next month after a subdued U.S. CPI report. Plus, European tech giant ASML maintains its bullish long-term outlook, expecting AI demand to boost chip sales. So credit markets rallied around the world after Donald Trump's U.S. presidential victory, with money managers hoping for tax cuts and lighter regulation to potentially boost companies' bottom lines. But some investors think the credit rally could fade over time, with bond yields rising because of a strong U.S. economy and high government borrowing weighs on corporate debt. Well, let's discuss all of this with Steve Tannenbaum, the founder and chief investment officer of Golden Tree Asset Management, one of the world's largest credit-focused asset managers with over $55 billion in assets under management. Steve, thank you so much for joining us. I mean, there's quite a lot going on as we try and figure out what the economies look like. So nice to speak to you. What regulation looks like under a Trump administration. What do you think will be a game changer under Trump for credit?
Well, there's already a lot of expectation in. If you look at spreads, about as tight as they've been in the last 20 years, you look at even yields, this is on a high treasury base, they're still only about average, even a little less than average. So things need to continue to do well, which is our base case, to justify current levels. Now, in terms of business velocity, there's already pretty healthy expectations for continued growth next year. You know, over 2% area. In terms of deregulation and velocity of deals, that's also good expectations that that's going to improve in a Trump administration.
Steve, what do you think the Trump administration will bring in terms of tariffs, possible fragmentation? If you look at all-out trade war, and again, there's a big question mark on whether we go with that. What does it mean for the U.S. economy? Okay,
first thing is there's the fear and then the reality. I think the fear is way overtaking the reality of what's going to go down. I think it's going to be incremental, is my best guess. And there'll be some actors who they cut deals with and some who they make examples of. If you look at the first administration, there was much more bark than bite. And I think there is a win-win for both sides, whoever they're negotiating with. And Trump will do the administration will do the best to find that equilibrium with many of the parties. But I think the fear is ahead of the reality in terms of tariffs.
Do you worry about stretched valuations in credit right now? And are there pockets where actually it's priced to perfection?
So the way of thinking about spreads is when you have a strong economy, you don't have a lot of defaults. So when you have spreads of around 300 basis points, it's under that, but that's called what it's been the last few weeks. Then if you have a 2% default rate and then you take out your expected loss, you're still at about 150 basis points of the excess yield. And if you take around a 4% area 5-year, which is usually the duration of what it's measured against, that's pretty fair. So as long as you have a good economy, the spreads will be justified. It's when there's concern that the economy is going to run into turbulence, that's where the valuations aren't going to be justified.
Are you expecting more M&A or consolidation in certain sectors in the U.S.? And again, what does that mean for credit?
Sure. So it's good for credit. And usually, if you look at certain industries, you look at telecom, you look at media, we believe it's going to be much more permissive. If you look at what happened under the Biden administration, they revised the guidelines, and the most significant guideline that they revised was the divestiture remedies. And divestiture remedies, usually you have a deal, and the idea is you need to have certain, you have to have certain behavior or divest to make the deal acceptable. And the Biden administration was much more restrictive on the remedies. And the idea is that the Trump administration will actually be much more permissive with remedies. And in industries such as media and telecom, we see a lot more deals happening. And you even see the expectations. You had John Malone talking about something like a Comcast and a Charter as being a deal that could happen under this administration. And that may seem far-fetched, but that would have been laughable to talk about a couple weeks ago.
And are you expecting also full-on, actually, deregulation? And what does that mean? You're sitting in London at the moment. I'm in Paris. What does that mean for regulation, across the pond, where in Europe? And what does that mean where you want to be deploying your cash or deploying investments?
Well, certainly the idea that there are synergies, merger synergies, that particularly in fixed-cost businesses like telecom, that's a good thing. So and it's also been an area that's had low returns. So the idea that you're going to continue to make significant investments in an industry like telecom and not get the proper economies of scale, my guess is somebody like Brendan Carr, who's been talked about to lead the FTC, that he'll be more understanding. He was somebody who was supportive of Sprint, T-Mobile, so we'd expect those types of combinations to get approved or certainly be more sympathetic to.
Where do you see opportunities in Europe? I know real estate has been a hot spot. Is now the good time to go in?
I know that the previous speaker here was cautious on Germany, but I see that, we're talking about some of the fears about tariffs, and, I think there's certainly, a chance that things could break a better way for Germany. You see it in terms of energy costs seem like they're coming down. If there's some resolution in Ukraine, that would be also another tailwind for that. In terms of some resolution on the tariffs, we'll just put finality. So I see that as a place that might have some more upside than maybe what's anticipated in the market.
And in the UK, I know there's quite a lot going on with water companies. Is this one of the spaces that you want to be invested in?
We believe it's broadly going to work out at the most senior area. And the reason being, there is this covenant in infrastructure, which is basically the government will give you a rate of return. And what's happened with companies like Teams and Southern, which I guess was just downgraded this morning, is the performance has been poor. And the issue is how much of a burden will bondholders, particularly senior bondholders, take on performance. And there's going to be a carryover effect to other infrastructure companies if the most senior debt holders are taking all the burden on the performance. So I think that there's still reasonable returns. My guess is because all the debt's going to be treated equal in whatever the resolution is, probably the lowest debt secured or the lowest price securities of the most senior securities, or the most senior lower price securities, are probably the best way to be, or best place to be. And there's still decent
Steve,
returns, called 15 to 20%.
Yeah.
Sure.
Okay, decent returns. I mean, where do you see the biggest shift? I know we talked about, credit like moving to loans. I mean, is this one of the, like if you look over the next 2 to 3 years, what's the biggest areas that will come up in your space?
Sure. Well, the first thing is that there's, just given where spreads are, there's a better chance that things come down than come up. When we look at the migration of risk has gone solidly from bonds and below investment grade securities to loans. You look at the composition of the bond indexes have higher quality issuers, and the composition of the loan index has lower quality issuers. So we believe on a relative basis, loans are more risky. So we also don't see that as fully played out in the market. You look at, for instance, on this year, you have more upgrade to downgrades in bonds and more downgrade to upgrade in loans. If you look at the recoveries, which used to be significantly better for loans, is now about even with bonds. So we don't think it's appreciated the relative value and change in composition from loans to bonds. Part of that is the largest buyer of loans are structured or CLOs or structured products, which is more of a manufacturing business. And so they're less particular until there's an issue than the bond buyers.
Steve, thank you so much for all of the great insight you have. Steve Tannenbaum there, the founder and chief investment officer of Golden Tree Asset Management. So we'll have plenty more, of course, on credit throughout the day. Also coming up, we speak to the Smiths chief financial officer a day after the UK engineering company reported strong results and increased revenue guidance. Our interview is next, and this is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Welcome back, everyone. Now, ASML shares gaining after the chip machine maker maintains its bullish 2030 outlook as it bets on AI-driven boom. Well, Bloomberg's Charlotte Hughes Morgan joins us with the details. Charlotte, so ASML reaffirming its 2030 sales outlook. Can you give us the details?
That's right, Fran. So ASML held its investor day today, and as part of that, it said that it would keep its 2030 sales outlook unchanged at between 44 billion euros to 60 billion euros. And it also pledged to return significant amount of cash to shareholders through dividends and share buybacks. And essentially, you know, you're right, this sends a bullish message to the market. ASML shares have been under pressure recently. Just last month, they cut their 2025 guidance, and third order bookings came in lower than expected. So this is basically ASML saying things are looking rosier down the line.
Charlotte, thank you so much for the update. Charlotte Hughes Morgan. Now let's get on to UK engineering firm company Smiths, reporting a strong quarter and increased revenue guidance after what has been a tough year for the stock. We're delighted to be joined by Claire Scherer, the Chief Financial Officer of Smiths Group. Claire, thank you so much for being with us today. So yesterday was, I imagine, a good day for you. The share price was up. You were able to guide upwards. But when you speak to a lot of analysts, they're worried about volatility in the stocks. What can you do to reassure them at this juncture?
Well, yesterday, as you said, we reported Q1 results, and it was an outstanding quarter. Every business and every geography contributed to growth, and we reported more than 13% organic revenue growth. On top of that, the 2 acquisitions that we made in September have already completed and are already contributing on top of the organic growth. And then, as you said, because of our confidence for the remainder of the year, we raised our guidance not only for revenue, but also for margin. And because of the strong balance sheet, we also upped our stock buyback activity. So we think this sends a very positive message for the confidence we have in the remainder of the year. And what we can do, Francine, is say what we mean and do what we say, just like we did yesterday.
I mean, some of the divisions, I know Interconnect has given you a spot of trouble. Are you now confident that actually the trend will be up from here? And actually, if you can break down some of what you're most hopeful about for your various divisions, Claire.
Thank you. In Q1, the 2 highest growers were, as you said, our Interconnect division and our Detection division. Our Interconnect division benefited in particular from the kit we supply to test semiconductor chips. And there we're benefiting from both the market recovery as well as the new products that we've introduced, which have had a terrific uptake in the market. And so there we do have an optimistic outlook. And then the other business, which grew exceptionally well, is our Detection business. That's our safety and security business, where we're in the middle of rolling out advanced threat detection capabilities at airports and other locations around the world. We're less than 50% of the way through that rollout, so we'll provide a tailwind for a few years to come. And I know you've been talking to many people at COP29 this week. Our machines are helping keep everyone at COP29 safe as well.
What are you most worried about in terms of your biggest challenges on deliverables?
Well, thank you for the question. I wouldn't say that we're worried. I would say right now we're focused because we've got secular growth exposures that are really compelling. So faster connectivity, increased safety, increased energy efficiency. And so all of those themes have a bright future in the near term and in the longer term. So what we're really focused on is executing the opportunity we have today, and at the same time, not forgetting to put the right amount of R&D and emphasis on planting seeds for the future, so that we're not only delivering in the near term, but so that we're also set up to continue that delivery over the coming years.
Claire Scherer, what does the Trump administration actually mean for Smiths Group? I think looking at a breakdown of your sales, you do about 45% exposure to the U.S. How much of that is actually manufactured in the U.S.?
Thank you. Well, the U.S. is our largest market, with about, as you said, 45% of our sales to the U.S. So we'll be watching closely what comes out of Washington, D.C. That being said, in the U.S., just like in the rest of the world, our operations are set up so they are largely local for local. What this means is we supply where we manufacture where we sell. And so that makes us largely immune to any tariffs that could arise. And that's why we feel very confident about our positioning in the U.S. And when you look at the Q1 growth we reported yesterday, the U.S. growth was mid-teens.
Are you hopeful about, I guess, an increase in defense-related sales within your detection unit, given what we heard from President-elect Trump, especially on how he wants to deal with NATO?
Well, defense sales are about 6% of our group revenue, so it's not a large driver of our group revenue, but some of the products we make are very important to world security. For example, we make lightweight chemical detectors that civilians or soldiers can wear in the field, which help alert when there might be chemical warfare. And we think that's a really important defensive product that many militaries around the world want to have as part of their kit that they provide for soldiers and civilians. We won a very important MOD contract, and also were appointed by the DoD last year, and so we'll be working hard to make sure that they have our best products and ongoing supply.
Claire, thank you so much for joining us. Claire Scherer there, Smiths Group Chief Financial Officer, with some pretty impressive results yesterday and the share price going up. Now, coming up, the UK's mega pension plan, the Chancellor, Rachel Reeves, tells us she wants to reform pensions to boost economic growth. We'll bring you our interview and look ahead to her Mansion House speech later. This is Bloomberg.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
I think it'd be wrong to speculate what an incoming US administration would do. But we benefit, and so does the United States, from trade worth more than £300 billion a year. That trade is growing, and it's important for the prosperity of both the United Kingdom and the United States. And we'll continue to make representations for free and open trade that benefits both of our nations.
OK, let's turn to your Mansion House speech. When it comes to harnessing pension money to boost growth, what are you going to offer in terms of reform that your Conservative predecessors didn't?
What we don't have in the UK is mega pension funds. We don't have those economies of scale in our pension funds, which is why the interim report that we're publishing looks at having a minimum size of 25 or 50 billion pounds, similar to what you have in Canada and the United States. Those sorts of mega funds will have the expertise to make those investments, both in start-up and scale-up businesses and in British infrastructure.
What's different to what Jeremy Hunt did, because he just finished this consultation into consolidating the local government pension scheme. It made these exact points. Do you really need another consultation?
Well, the difference between what we're doing and what the previous government did is that we're going to legislate. And the previous government didn't have a pensions bill for around 5 years. We have a slot in the King's Speech for a pensions bill in this session of Parliament. We'll be introducing legislation in the spring so that we don't just talk about consolidation in the pension industry. Anyone can do that, but we actually make sure that it happens. That's the difference between this government and the previous government. We're getting on and doing the job.
Well, that is, of course, the UK Chancellor Rachel Reeves speaking to our UK correspondent Lizzie Burden. Lizzie joins us now with a preview also of the Chancellor's first Mansion House speech tonight and what's being billed as a wide-ranging policy pitch. So, Lizzie, a major change being proposed for government pension funds.
Yeah, Rachel Reeves there, Francine, saying that £1.3 trillion worth of pooled savings in these mega funds would drive £80 billion of extra investment. So this is a significant moving on of what the previous chancellors had done. They'd consulted. She says the difference is that they will legislate. But there are two big issues with this. First of all, how do you make sure that that money actually goes into UK companies? I asked her whether she'd use mandation. No. I asked whether there'd be tax breaks like Australia, because in other ways they are inspired by the Australian model. And she's not forthcoming on that either, understandably perhaps, given the fiscal constraints on this government. The other problem is, how do you get more money into the pension pots in the first place when employers are so squeezed by all the tax hikes in the budget? They've got a higher minimum wage to pay, potentially higher interest rates for longer, given that this budget was inflationary, according to the Bank of England and the Office for Budget Responsibility. She's not rowing back on any of that. So it puts a lot of pressure on the size of these funds to do the work, to drive the investment. But Francine, as you say, this is going to be a wide-ranging pitch to the city at Mansion House tonight. I'd also expect her to talk about cutting red tape, tightening her grip on the regulators. The three main pillars of this speech, I expect, will be stability, investment and reform. And she's also, of course, going to have to address the fact that Donald Trump is returning to the White House. She talked there about how Britain's committed to free trade, but she did stop short of ruling out retaliatory tariffs in our conversation. Be interesting to hear what she says tonight.
It certainly will. Lizzie, thank you so much. Our UK correspondent there, Lizzie Burden. Now let's also take a look at some of the big earnings movers this morning. Burberry shares soaring after the British luxury goods maker's retail comparable sales for the first half surpassed expectations. We've been waiting for some good news from Burberry for a long time, gaining 15%. Montepaschi shares also jumping after Italy sold a 15% stake to investors, including rival Banco BPM and Anima. Plus, Siemens hit a record high as analysts lauded the German industrial group's strong fourth quarter report. You can see Siemens gaining 7%. Up next, Bloomberg Brief, Manus Cranny in New York, and goodbye from Paris. This is Bloomberg.
will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
They're the people who deal the cards, whether it's fire or electricity, or for good or bad, or the cotton gin, or the iPhone, or the atom bomb. Mm-hmm. Those are the cards, and the rest of us just play it. Would you agree with that assessment?
I think technology is the thing that causes these big step changes in civilization. So obviously you've got things like, say, the Gutenberg press, before which it was very difficult to get books. They were very rare. Even if you had a thirst for knowledge, you really couldn't do anything about it because there were very few books to read. So, and the internet is something beyond the Gutenberg press, I think. But you know, when I first saw the internet coming into being in a way that the general public could use it, it felt like the humanity as a whole was developing a nervous system. So previously, the way the information would travel would be by osmosis, one person to another, or one person calling another. But the access to information was very limited. Now with the internet, it's like having a nervous system. It's like any part of humanity has access to almost all the information of humanity. Like you could be in the middle of the Amazon jungle with, say, a Starlink terminal and have access to more information than the president did in 1980.
Good morning from our global headquarters in New York. I'm Menace Crenny. Danny Berger is on assignment. Welcome to Bloomberg Brief. Let's set your agenda. Loyalty First defines the surprise nominations. President-elect chooses Matt Gaetz and former Democrat Tulsi Gabbard to serve in his next cabinet. Next move, the approvals. It's a lock. The GOP takes the trifecta in Washington as John Thune is elected to Senate Majority Leader. Uncertainty in the Fed. Several officials reiterate concerns over how far the central bank will need to lower interest rates and urge caution on the cuts. We flip to green as Washington flips to red. There you go. S&P 500 eking out the tiniest of green on your screen. NASDAQ slips this morning down 7 pips at 21,151. I mean, what you've got here is uncertainty. You have a trifecta in Washington, an 80% probability of a December rate cut. And you have Barclays favoring the U.S. growth stocks and big tech strength. But the Philly semiconductors dropped by 2% yesterday, fourth decline in a row. Roll it over and you will have a look at what this bond market has done since the election. The 2s are up 13 basis points. The 10s are up 20 basis points. You have an 80% lock post the CPI, the core CPI yesterday. So we're up 1 basis point on 10s this morning. Kashkari has the confidence that we are not in stagflation. HSBC, by the way, Stephen Major, short-term bullish on treasuries. Reversal of the rally looks overdone. The summer rally looks overdone. And he's raising his floor on treasuries to 3.5% from 3%. The risk is rate hikes in 2025. Go figure. Roll it over, have a look at Bitcoin. Why not? I mean, it is just stratospheric through the past 24 hours. We made it up to $93,000. We've come back ever so slightly. We're at 91,000 and change. If there is a strategic reserve, $500,000 is eminently possible, according to Mike Novogratz. He wouldn't cry over that. My guest this morning is Tim Graff, head of EMEA Macro Strategy over at State Street, and he writes this. We do not see excessive positioning, limiting the moves for a higher dollar. Rates, strong dollar as such, given the macro backdrop, we see these moves extend. He joins me now. Good morning, Mr. Graff. There's no sign of irrational exuberance, but are you prepared, do you think we should be prepared to add to our positions across those pro-Trump risk trades?
Morning, Manus. I think some of them, sure. I think we are in overbought territory in a lot of things. You mentioned Bitcoin, that certainly fits the bill. The dollar probably for the short run. But I think after some consolidation in the dollar and rates, yes, I think the fundamental backdrop, and as you mentioned, positioning, you know, we look at the positions of institutional investors in currencies across the board, and in the dollar, they are overweight, but that overweight is nowhere near as extreme as we've seen in previous dollar rallies. And I'd argue the fundamental backdrop for further dollar rallies is every bit as strong now as it was in, say, 2022, during COVID, during 2015, when you consider the policies that are likely on offer from the Trump administration, and particularly how inflation expectations may need to reprice a little further, rates may need to reprice a little further, and that divergence between the U.S. and other economies comes to the fore yet again. I think that argues for the dollar higher over the longer term.
So what's the lowest hanging fruit? I mean, we just had a trifecta in Washington. It's a razor-thin majority, but it is a majority nonetheless, and it is control. Does that embolden the long dollar? Kit Jukes was with me the other day. He said it runs out of breath at Christmas.
Yeah, I think it does embolden it, and you never really want to fade momentum in Q4, I don't think, and momentum is pretty strong. It emboldens them legislatively. Will they get everything that is kind of projected across? I doubt it. As you mentioned, these are thin majorities. I think particularly some of the cabinet appointments that have been announced over the last 24 hours may run into some difficulties. That has very little to do with economics, but I think it speaks to the notion that this probably won't be a carte blanche type of administration where they get every single thing they want. There will be compromises. They have talked about, you know, cutting spending and reining in deficits. So they need to balance one of the, you know, they need to balance those two factors. It can't just all be about spending and cutting taxes.
Listen, I think I'm the only person that's sort of wandering around talking about maybe they'll be fiscally a little bit more responsible than everybody thinks out there when you listen to the narrative from Scott Bessent. But I'm a lonely person in a field. Tell me this, the bond market. 2's up 13 basis points since the election, 10's up 20 basis points. I put it to you, this is just moderate bearishness and not even a sign of vigilantism.
No, I think it's a repricing of inflation expectations primarily. You've seen a big move. If you look at something like five-year forward inflation swaps in U.S. rates, they've moved up considerably the last 6 weeks, and the nominal rates market has to account for that. I think you get problems in rate markets if that starts to really de-anchor. We're not far away from the highs of inflation expectations by that measure. As we saw during COVID, we're 15, 20 basis points away from that. If that does prove a disorderly move higher, then I think you have real problems in the rate complex where it may see long end rates especially push a lot higher. We're not there yet. The labor market data is softening. Inflation, as we saw yesterday, is at least coming from sectors the Fed's willing to look through for the time being, and expectations have sort of topped out. But it's certainly the risk for the long run.
Look, you're looking at these five-year inflation swaps, and you are raising that this could be the alarm bell. What does de-anchoring look like? I mean, what is de-anchoring to the point, Tim, that could cause an extended pause, if not even a hike, 2025?
Yeah, it's a really good question. I think de-anchoring consists of, I think the high on that index over the last 5 years has been something like, let's call it 2.8%. If you get through that level with a pretty sharp move, and then it sits there, or even continues to rise higher, I think that's your first sign that there is some de-anchoring at play. I think that will absolutely get the Fed's attention. For now, they can probably relax that it's so far been just a repricing of expectations, and you haven't broken kind of a new high range. But if you do, and if you even start to see the signs of it, or if you get a sharp move towards that, they will have to take notice. And I don't know if it necessarily means hikes quite yet, but it means the plans to ease probably go off the table at some point in Q1 next year.
I'm looking at Stephen Major's note from this morning. It's not to pit HSBC to State Street, but it's interesting. Stephen is an Uber bull. We know that. He's raised his floor to 3.5% from 3%. He talks about the possibility of hikes in 2025. And this is perhaps the tail risk for all risk in the markets, isn't it, of that hike in 2025?
Yeah, I think so. I think that takes a lot of the positivity in risky assets in particular off the table, if that's the case, and especially if it's a hike because of de-anchored inflation expectations or higher actual inflation. If it's a hike because U.S. growth or U.S. productivity continue to fly, as they have done, defying expectations the last year or two, that's not going to be great for rates, but that's also probably not going to be bad for risky assets. You get into that kind of negative correlation between bonds and equities that we've been seeing a bit more frequently lately. But if it's inflation driving that, and inflation expectations especially driving that, that is a real problem, I think, for the panel of risky assets that we've seen rally recently.
Tim, does it matter to you the choreography of what Trump to the administration goes for first? They now have control of the House, they have control of the Senate, and they're in the Oval Office. For the theater of what comes, whether it's the alpha of tax policy in the very first 100 days or an alpha of tariffs, because they are two very different things with two very different risk narratives.
Yeah, I would say it does affect my thinking in that I think tariffs are the avenue that they can go down more unilaterally, and they can kind of do it by fiat to a degree. So I think that's probably the front and center concern, and it has the potential to de-anchor inflation expectations. Even if it is potentially a one-off shock to prices, it has that potential to raise inflation expectations. More so, it worries me more so than tax policy, which is going to require a process with Congress, and as we talked about before, might run into some negotiation and consolidation of expectations. So I think the sequencing of it, you're right, it is important, and that's why I think tariffs come probably first, and is, I can't read their minds, but I would guess is probably on the agenda first, because it's that much more unilateral in possibility.
And it makes great headlines, doesn't it? And we know every administration, red or blue, loves a headline. Tim, thank you very much. Tim Graff, setting the agenda for risk. There are other stories trending on your Bloomberg terminal this morning. This is what I got for you. Burberry shares are rallying after it delivered a sales beat. Analysts were particularly positive on the new CEO's strategy, which includes a return to its roots as a maker of, you got it, the trench coats and the scarves. LVMH appointed new divisional leaders, including the return of the CEO Bernard Arnault's son to the Paris headquarters. Alexandre Arnault will serve as the deputy chief of the company's wines and spirits division, leaving his New York-based position at Tiffany's. The reshuffle is fueling succession talk. The U.S. Justice Department is investigating crypto predictions betting platform Polymarket for allegedly accepting trades from U.S.-based users. That's according to a person familiar with the matter. Polymarket says the FBI agent seized its CEO's phone and electronics. Coming up, Gates and Gabbard will bring you the very latest on President-elect's cabinet and an update on Congress. A little bit later this hour, we catch up with JP Morgan's Priya Misra. She will join me around the desk on why rates' reaction to Trump's win is different this time to 2016. Good morning from New York.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
It is Bloomberg Brief. I'm Menace Cranny here in New York. President-elect Donald Trump shocked Washington with his decision to nominate loyalist Matt Gaetz as his Attorney General. Trump also picked the former Democrat Tulsi Gabbard as Director of National Intelligence. Former House Speaker Kevin McCarthy, who was toppled by Gaetz last year in a rebellion by the ultra-conservatives in the GOP, told Bloomberg that Gaetz won't get confirmed by Congress.
These are very good except one. Look, Gaetz won't get confirmed. Everybody knows that. It's a good. How are you reading it? It's a good deflection from others, but Gaetz couldn't win in a Republican conference, so.
Well, let's be frank, Kevin McCarthy has beef here. Joining me now is our chief political correspondent, Anne-Marie Horder. And Anne-Marie, good to see you. Look, there's been, yesterday was a deluge of, depending which channel you tuned into, about Matt Gaetz, obviously under investigation by the House Ethics Committee. McCarthy has beef. What's the reality of this kite?
So he is under investigation. In September, the House Ethics Committee did something that they normally don't do, which is give us a little bit of an insight of what actually he was under investigation for: illicit drug use, sexual misconduct, sought to obstruct government investigations of his conduct. Now, everyone's going to focus on the fact that Donald Trump is nominating the congressman from Florida, Matt Gaetz, to be his attorney general, which the senators yesterday, someone like Susan Collins of Maine, talking about the fact that she was shocked by this announcement. What we should be talking about this morning is that Matt Gaetz resigned yesterday. And then Jake Sherman of Punchbowl News came out with reporting that the reason why potentially he resigned is because this week the House Ethics Committee was going to vote on making public this, what they're calling highly damaging report. Once you resign from Congress, that report likely will get buried. Potentially, it could still be made public, but that would mean that a Republican would also have to vote on the committee with the Democrats to release that. And that's not going to look good, and that's going to create a lot of drama for someone like Speaker Johnson. Now, think about this. The House Ethics Committee has all of that content and material. So when Speaker McCarthy comes on and says, no one thinks he can get confirmed, that's the reason why, not just because the two have beef.
Okay, I mean, our headline is obviously the Republicans take a trifecta. Now, this is a very different regime, isn't it? Matt McConnell is no longer the Senate Majority Leader. Paul Ryan's no longer there. So this is a very different complexion trifecta to 2016.
And with the Matt Gaetz resignation, with the fact that Congressman Walt of Florida has been picked to also be Donald Trump's national security advisor, and the fact that Elise Stefanik of New York is going to go over to the UN, this means that Speaker Johnson, even though he has this majority, and we still don't know how slim that majority is going to be, it's projected the 218, but how much of a buffer of the seats he's going to have, his first order of business is going to be having to make sure he can keep that majority because they need to fill those 3 seats they're about to lose.
But then that's got big consequences in terms of just how aggressive the political agenda can be, whether it's on tax, whether it's on immigration, and that's the key issue, isn't it?
Absolutely. On tax and fiscal issues, they can go through this process of reconciliation because they have that majority in the Senate as well. other issues where you're going to need 60 votes in the Senate to get through, and you have this new Senate Majority Leader, John Thune, in really the ethos of Mitch McConnell. He was his number 2. You're not going to have something like the filibuster be blown up. So they're going to have to get to 60 votes. So not everything they want on the wish list is going to get done. The most likely outcome could be on the fiscal side. So that's we're talking about things like tax cuts.
How much of a rub do you think to Trump was it from the Senate that they went for John Thune rather than Rick Scott? Rick Scott was, we understand, the primary sort of backing and choice of Trump. Do you think this is slightly one in your eye?
So all the accolades around Trump, Elon Musk, they've all come out, the MAGA wing of the party, going for Rick Scott.
Yeah.
Trump didn't exactly endorse anyone. And we heard from Jessica Taylor of the Cook Political Report yesterday, and said Trump doesn't like to be seen as picking losers. It was very obvious that Rick Scott, this was going to be an uphill battle for him to get. And what Thune is going to be is he's going to be almost a guardrail of anything Trump tries to push through. This is someone who's an institutionalist. He is really this idea of the man of the Senate. And in 2022, when he was up for re-election, Trump wanted to primary him and said he was a Republican in name only. So there has been some friction between these two men, and he is now the Senate Majority Leader.
But as you said, potentially that's some kind of a guardrail and leaves Trump with slightly hands-off from the Senate. Anne-Marie, good to see you this morning. Good luck on surveillance. You can catch Anne-Marie over the next 3 hours, 6 a.m. to 9 a.m. with the surveillance team. Our chief political correspondent. Coming up in the show here, ASML. It upholds its bullish outlook for 2030. What does that say about AI demand? I'll tell you in just a moment.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bloomberg Brief. I'm Manus Crenny in New York. Front pages for you. This is what we've got making news headlines around the world. First up, the New York Times. Trump and Biden make nice at the White House for at least 29 seconds. Biden welcomed Trump back to the White House before the two held a behind-closed-doors meeting that lasted 2 hours. Trump skipped the tradition last time when he refused to concede the election. The imagery of the fire was pretty potent between the two of them yesterday evening. Next up, the Journal leads with Trump's transition co-chair makes a late play for Treasury Secretary Cantor Fitzgerald's CEO Howard Lutnick has reportedly gone directly to Trump about becoming the Treasury Secretary. That's according to the Journal sources. The move has become noticeable to Trump aides, as Lutnick hadn't directly advocated for the position until recently. In Bloomberg, we lead with ASML upholding the 2030 sales forecast in a bet on AI-driven demand. The stock rose on the upbeat outlook. The Dutch maker of the chip machines also plans to continue returning cash to shareholders. Let's get to Charlotte Hughes Morgan. She joins me now. Charlotte, look, this is a very different report to what we saw in October. The stock absolutely tanked then, down 16% on the day. Do we breathe a sigh of relief on the guidance?
Well, that's right, Manus. ASML held its Investor Day today, and it reaffirmed its 2030 sales outlook for between 44 billion euros and 60 billion euros. And it also pledged to return significant amounts of cash to shareholders via buybacks and dividends. And yeah, I mean, absolutely, this is a bullish signal to the market for the long term, right? I mean, last month, ASML third quarter orders came in far lower than expectations. They cut their 2025 guidance. So this is basically ASML saying, look, further down the line, things are a lot rosier.
We're getting ready for Trump Mark II. ASML has already felt the headwinds of restrictions in what they can do in China, but they still do business in China. How's that looking, and what are the headwinds there?
I think the China story remains to be seen. You know, there are obviously still export restrictions on ASML regarding, you know, exports to China. I think we'll have to wait and see with that one. But I think what ASML are saying here is they're really betting big on the long-term opportunity in AI, really. You know, in the statement, they say, look, demand for AI is going to stay really strong. We might see some market weakness, you know, in 2025. But look, 2030, 10 years down the line, AI is going to still be absolutely booming. The semiconductor industry is going to be really strong as well. You know, they forecast that global semiconductor sales are going to be over $1 trillion by 2030. And they're saying, look, we're well positioned to leverage our advantage in this space. You know, ASML are the only company that make these types of really advanced lithography machines that are needed by companies like TSMC to make the chips that are powering the AI boom. So, you know, from that perspective, ASML are saying, look, we are ready to capitalize on this, and our business is looking strong in the long term.
Charlotte, thank you very much. Bloomberg, Charlotte Hughes Morgan on ASML. We started the show with a little bit of bonds and equities, but crypto is perhaps the ground zero for Trump trades. We're flying higher this morning across the contributors to the Bitcoin rally. What you've got here is Bitcoin up just under 3% at 91,000. We did make it to 93,000 a little bit earlier on. And the view out there is, could they build a strategic reserve here in the United States of America, as was proffered on the campaign trail? That seems to be a little bit, or the odds of that are low, according to Mike Novogratz, who, of course, would not be averse to that. The people that I talk to that trade meme stocks in Wales say what you've got here is a cycle in the cryptocurrency, which will come off the boil eventually, settle down, and then you will see a flood of money and profit-taking from crypto. That will drift into the meme stock world. You've got Doge up over 5 days, up by 80%. That's a meme coin, not the department. Coming up on the show, we're going to catch up with JP Morgan's Priya Misra on why the bond market's reaction to Trump's victory this time around is different to 2016. Context matters on Bloomberg.
sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Global headquarters here in New York. A very good morning. You're welcome to Bloomberg Brief. Let's set that agenda. Loyalty First defines the surprise nominations. President-elect Trump chooses Matt Gaetz and former Democrat Tulsi Gabbard to serve in his cabinet. Next move, the confirmations. It's a lock. The GOP takes the trifecta in Washington. John Thune is elected Senate Majority Leader. Uncertainty in the Fed. Several officials reiterate their concerns over how far the central bank will need to lower rates and urge caution on the cuts. We flip to green. Have we still got it? 30 minutes later, we have. Equities flip to green as Washington flips to red. NVIDIA is up next week. That's your next hurdle. Never mind the election. NVIDIA is going to be the demonstration of real belief in these markets. Barclays say you still want to be long of growth and big tech. Semis dropped for the 4th day in a row yesterday, but we're hanging on by our fingernails, really, to this market. Despite that, have a look at the bond market. The bond market is so much more assured. And I just wonder, will Prime Minister be so assured that an 80% probability of a rate cut in December? Core and supercore CPI yesterday emboldened the drop in yields. We take one tick higher this morning. Kashkari with Bloomberg, yes, he's confident that we are not in stagflation. Joining me now around the desk, it is Prime Minister, Portfolio Manager at JP Morgan Investment Management. Good morning, good to see you.
Morning.
A plethora of risk-on assets, but I want to go straight to the bond market since the election day. Let's have a look at it. 10-year government bond yields have risen by nearly, well, it was 21 before I came on the telly, by 19-20 basis points. You would say this, that the bond vigilantes are not dead. We have weekly auctions to remind people of supply. Right now, bond vigilantes are offset by weaker hiring, Fed cut-focused investors, but that balance may not last for long. So, what drops first? How do we go out of balance, and how quickly do we go out of balance?
So I think that's the key question. It's going to hinge on a couple of things. How does the economy, ultimately the bond market, every market looks at fundamentals. How's the economy proceeding? I would say hiring is slowing down. We're still in a soft landing. Do we stay in a soft landing? So that balance starts to go away if it looks like we're actually re-accelerating. If you get, policies of significant fiscal stimulus, then I think that balance starts to change. Or does the economy actually continue to slow down? The Fed that's nervous about cutting too much, do they actually slow down that pace? So the balance can actually go both ways. The other one would be, what policies are we going to get on the supply front? I think there's a lot of optimism around significant fiscal easing, but look at what we've heard so far. Even on the campaign trail, both sides were actually talking about where do we cut and we already have this between Elon Musk and Ramaswamy.
I'm glad you bring that up. It's not being talked enough about.
I think there's an expectation that there's just a little bit of waste that can be cut. You can't cut 2 trillion, which is the aim that they're talking about. If you're actually cutting 2 trillion and you're offsetting that by taxes, that's not significantly more supply. Now, we have to see exactly what DOGE or Department of Government Efficiency comes up with. Where are they cutting? Remember, a large part of the hiring has been government as well as state and local. If that starts to cut back, if the reduction in spending means less hiring, well, then we stay in balance because the Fed's going to continue to cut. So I think there's this tension right now. We're in a soft landing. The balance is there. Let's just see how the economy goes by and what are we seeing in terms of net fiscal stimulus, not just tax cuts.
And that's going to define supply in terms of bond supply. Exactly. And that is where you would say the vigilantes could be reawakened. But if there is more fiscal largesse, there is an inflation risk. And this is what I was talking to Tim Graff about a little bit earlier. There is an incremental rise in the 5-year break-evens. And this is where I'm seeing a divorce between what the Fed are telling me, that we're not in stagflation, that we're going back to target, and what the market thinks of where inflation is. And it's going higher.
Yeah, I'm glad you bring up inflation because, we look at what can happen out of the debt. Inflation was below target. Inflation now is above target. Now, you talk about the Fed. I think the Fed's looking at cumulative progress. CPI was 9%, it's 3%. We're not at 2. We're definitely not below 2. And I think the markets looked at the progress on inflation. The speed of that progress has gone down. You could actually argue in the last couple of months, there hasn't been much progress. Now, I think the Fed's still saying, well, we're not at 9 or 7 or 5%. But if that progress stalls and the break-even market is starting to sniff out, if you get tariffs, you get 60%. I'm actually looking much more at the rest of the world. If you get that 10 or 20% tariffs, that's absolutely inflation. It's a price level shock. And that's going to create stagflationary risk, which we heard from Chair Powell, they actually don't have a way to solve it. So I do think right now the Fed is looking at break-evens and saying, well, it's gone up a little bit, it's not concerning. I actually think much further increase there will stall how quickly the Fed's going to cut, and that balance you were talking about starts to shift. So it's both debt and inflation. And I think if the administration understands that we're in a different place, I don't think you get a lot of what's being talked about.
And this is the point that you make. It is not 2016. The capacity to take a huge amount of stimulus, a huge amount. And by the way, the Trump tax cuts are already in there. The impact of the corporate tax cuts, from 35 down to 21, 21 down to 15, or 21 to 20, it's not going to be the same alpha as you had in 2016. Put the context around what is it that constrains this market relative to 2016?
I would say it's debt and the focus on debt. The bond vigilantes in 2016, I think, were hiding in the woodwork because interest rates were 0, or the Fed had raised rates once.
Yeah.
So the debt concerns were much less, and I would say it's a global debt concern. We've gone through the UK. I mean, the emerging markets, I think, for a while have been debt-focused. Developed markets, we just lived through the Liz Truss moment in the UK. You're seeing nervousness around Germany. We've had the debt levels have significantly increased. So that's one constraint. Inflation expectations. I mean, in 2016, there was no concern around inflation.
So with everything we've just talked about, my inbox is full of 5%, 5%, 5%. We're going to 5%. Stephen Major raises his floor from 3 to 3.5. He talks about the risk maybe even of rate hikes next year. Where do you see realistic? Do you see we break above 4.5, given the context of what we've just talked about? We need to know policy. I know that. But where is the skew? Is my risk reward a tail risk of 5% or 3.5%?
I really struggle with 5. And I struggle with the broader market being able to accept 5%. If you're getting a 5% in 10-year, well, where are corporate rates? So, I think then the corporate sector starts to struggle. Where's the housing market in that scenario? I don't think the economy is not interest rate sensitive anymore. The reason why the Fed's been cutting is they know monetary policy is restrictive. They just cut 50 basis points. They've cut overall 75 basis points. The 10-year's gone up about 100 basis points. So they know
that's not what they wanted, is it?
Exactly. And I think that's the question. Have financial conditions eased since the election or tightened? could actually, depending on what you look at, you could actually say it's tightened. For interest-sensitive sectors, it's tightened. So I would say risk assets will struggle with 5%. The economy starts to struggle. I don't think that's sustained. Can you get there in a knee-jerk market just gets there in a volatile way? Sure. I don't think it's sustained.
We've got a couple of quick things to get in. What is the flashing number in the bond market that restrains the fiscal largesse? What do you think?
You mean what side level on the 10-year?
Yeah, what level on the 10-year?
Look at long end real rates. I think 2%, above 2% is a concern. 5% on the 10-year would be a concern. We saw it last year as well.
And let's just quickly close off. Investment grade and high yield. I mean, these spreads are tight. High yield is the tightest since 2007, the tightest in a century on investment grade. If there's still a wall of money comes into the dollar, you know, can those spreads go tighter again?
Absolutely. They're tight. On a historical basis, they're tight for good reason. Look at corporate balance sheets. They're very healthy. Companies are not re-levering. Look at the earnings side. Well, in a soft landing, spreads are telling you that. Look at all-in yields. You're getting 6% in investment grade, 7, 8% in high yield. I mean, think about where everything is so well valued. That's why we're continuing to see inflows into fixed income. I think it makes a lot of sense, you know, and I think bonds as a hedge to risk assets is still alive. So I think fixed income, high quality spread products still make sense.
Priya, thank you very much. That is Priya Misra of JP Morgan. Her view on the markets. We're all going to struggle at 5% coming up on the show. Gates and Gabbard will bring you the very latest on the president-elect Trump's cabinet and what Senator John Thorne's leadership could mean for the Trump agenda on Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the U.S. We did that between different parties in Lebanon, in Sudan, and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bloomberg Brief from Manuscrani here in New York. President-elect Donald Trump shocked Washington with his decision to nominate loyalist Matt Gaetz as his Attorney General. Trump also picked the former Democrat Tulsi Gabbard for Director of National Intelligence, former House Speaker Kevin McCarthy, who was toppled by Gates last year in a rebellion by the ultra-conservatives in the GOP, spoke about the odds of a Gates confirmation.
I think choices are very good except one. Look, Gates won't get confirmed. Everybody knows that. It's a good. It's
How
a good,
are you reading
It's a
it?
good deflection from others, but Gates couldn't win in a Republican conference, so.
Joining me now is Stephanie Baker. Stephanie, listening to McCarthy there, he's obviously got beef. He was toppled last year. Matt Gaetz, here's the issue. Will he get confirmed? And we're also understanding that he's still under investigation by the House Ethics Committee, and there's a report. Having resigned, will that report be released, and could that be the spoiler?
Well, Trump seems to be daring Republicans in Congress to defy him by holding up Gates's confirmation. But the Republican majority in the Senate is still relatively slim. I can think of a handful of Republican senators like Susan Collins of Maine or Lisa Murkowski of Alaska who might oppose Gates. As you mentioned, he had been under investigation by the House Ethics Committee after the Justice Department had investigated Gates over a sex trafficking case. It dropped that case, and then the House Ethics Committee started their investigation over allegations of sexual misconduct and illegal drug use. And it was due to vote tomorrow on the release of a report on Gates. And I think now there will be massive pressure to release that report, or perhaps for journalists to get their hands on that report. I think this is really a test of whether Republicans will allow Trump to make recess appointments. In other words, bypass the constitutional requirement to have the Senate go through
Stephanie, how bad a look would that be, or would it just be get used to it, this is the way it's going to be, and he could go for these recess appointments?
I think it is a bad look, and I think it would sit uncomfortably with a lot of Republicans in the Senate. Remember, there are a lot of traditional Republicans in the Senate. This is undermining the Constitution, but it's true. With Republicans now in control of both the Senate and the House, this does give Trump sweeping authority to enact his agenda. It's obviously a slimmer majority than he had when he first got elected in 2016. But I think the difference now is that the Supreme Court has given Trump this wide-ranging immunity to be able to do whatever he wants, really. So I think it will face he will face difficulties if he tries to get his more controversial appointments through without Senate confirmation.
And then when it comes to policy, John Thune has been appointed leader of the Senate. And again, the question will be, to what extent is he a quasi-guardrail on policy? Because he's not exactly buddy-buddy, and we know that there was an intimation from Elon Musk behind Rick Scott, so it's not exactly gone according to the Mar-a-Lago House plan.
Right. Right. Trump did not want Thune. He wanted Rick Scott. I think this puts Thune in an incredibly difficult position. Does he defy Trump on some of his more controversial nominations like Gates, or do Republicans fall in line and particularly after Trump led them to this sweeping victory? I think he's going to have to pick his fights carefully. Another controversial appointment, I think, is the nomination of Pete Hegseth to lead the Defense Department. He is patently unqualified for that job. He served in a relatively junior position in the military. He was a Fox News anchor, but he's never managed people. And now you're putting this guy in charge of the largest army in the world with a multi-billion-dollar budget at a time of great uncertainty around the world, with wars raging in Ukraine and in the Middle East and China threatening Taiwan. So I think it's going to be a real test of the more traditional Republicans in the Senate. Do they defy Trump or not?
Well, it's early days, and you know what happens if you defy the leader in the Republican Party. We've seen it before. Get ready for your Twitter moment. Stephanie, thank you very much. Stephanie Baker there on the very latest political moves in Washington. Let's turn our attention to the U.S. earnings sheet. About 90% of the names of the S&P 500, they've already reported, and today we're watching Disney. The results will be out before the bell. Geetha Raghunathan joins me now. Geetha, good to see you. So when I look at Disney, we're expecting a bit of a bump in revenue, but if you break the business down for me, I mean, there's some challenges in the theme parks, but the studio, I mean, it had some good blockbuster names out there, Inside Out 2, Deadpool. So just break it down for me, that sort of the bid and the offer within the Disney family.
Yeah, absolutely, Manus, and thanks for having me. So yes, you're absolutely right. There is going to be some softness at the theme park division. Now remember, this has actually turned into the bread and butter for Disney. It makes up about 50 to 60% of their entire profit pie. But yes, while you have the softness in the theme parks and potentially also at the linear TV network business, which is really industry-wide challenges, you do have bright spots in both Disney's streaming business because they're turning around a profit finally after losing billions and billions of dollars. And of course, as you mentioned, that big turnaround happening in the studio after a slew of, underperforming films. So you have the two positives with the studio and streaming, and of course the somewhat negatives with the parks and the TV network business.
Talk to me a little bit more. I mean, I just looked through some of my direct debits in terms of what I'm paying for on television. I won't reveal that in public, but I've got a lot of regular debits going out from multiple options on streaming. Talk to me about Disney's streaming business.
Absolutely. So Disney's streaming business, very much part of the whole industry-wide slowdown. So we've seen a slowdown in Disney's subscriber growth as well. That said, the Disney Plus streaming business is still, a formidable business. We have almost 200 million subscribers to all of the Disney streaming services. So obviously they have scale. Now the problem is for them has been, profitability. So they lost about $4 billion in 2022. They lost about $2.5 billion in 2023. The good news for them is this year, because they've been able to pull all these multiple cost levers, they're actually going to turn a slight profit. Mm-hmm. Now the question for them is, are they going to be able to keep up that ramp in profitability? And I think what investors are a little bit worried about, and we'll get more answers to this on the call, is that the ramp to profitability, because we know Netflix has kind of really set the stage here with $10 billion in profit this year for their streaming service. Is Disney going to be able to achieve that same level? I think what investors are going to find is that fiscal 2025 is going to be slightly tough, but I think we're going to see a significant ramp up after that.
Okay, Geetha, let's see what the numbers are. There's a great headline here from Nelson Peltz. Disney will get a respectable CEO with the former Morgan Stanley CEO, James Gorman, spearheading the search. It's all about succession. Geetha, thank you very much. Geetha Raghunathan there on the Disney trail from Bloomberg Intelligence. U.S. sports betting has only been legal outside Nevada since 2018. Now it's permitted in 38 states. And last year, the operators made nearly $11 billion in revenue. DraftKings projects it will reach $6 billion in revenue next year. My co-host, Danny Berger, spoke to the CEO, Jason Robbins, and the CFO, Alan Ellingson.
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more. When you're cash flow negative, when you're in the early stages of being a company, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Now, along the way, there will 100% be opportunities to drive efficiencies, and we like to think about those long term. And we're in the fortunate position where I think we don't need that necessarily to make next quarter or next year's profits. It's much more about how do we build the most efficient, scalable company long term so that we can win competitively and win with the customer.
That was the DraftKings CEO and CFO speaking to our very own Danny Berger, my co-host, and you can see the full episode of Chief Future Officer on Bloomberg.com and YouTube. Tune in. Coming up, we'll get you set up for the trading day, including More remarks from the Fed Chair Powell. Yep, the leader speaks right here on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
There is this real momentum from Wall Street. We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Bloomberg Brief. I'm Manish Cranny here in New York. Let's set up the day ahead for you. As we've just discussed, you get Disney before the bell, plus an interview with the JP Morgan CEO, Jamie Dimon. That is at 2:30 p.m. Eastern. Fed Chair Powell speaks on the economic outlook. He's in Dallas. That is at 3 p.m. And that's going to be a real focus. You've got jobless claims as well and PPI. So again, another narrative about what feeds into the PCE. Some stocks that are moving. We talked about crypto through the morning. Coinbase, MicroStrategy, both rising as Bitcoin continues to rally. You've got Cisco. That's dropping. They gave a conservative guidance, really, on the outlook, delivering better than expected results. When it comes to these markets, it is ground zero. What happens next in this bond market? From a political point of view, you have a trifecta in Washington. Rates just, look, they're flat at the moment. 445, Prime Minister with JP Morgan with me there now. She's not a believer in this 5% narrative on the upside. There will be more talk about perhaps fiscal probity rather than fiscal largesse. You saw near double-digit moves drop in yields yesterday on the back of that CPI, and the core CPI being the lowest since July. But the debate is this: the 5-year break-evens are rising. The risk is they become de-anchored, according to Tim Graff at State Street, a de-anchoring of inflation in 2025. And that then plays into Stephen Major's view, is that you could have the risk of rate hikes next year. And he raises his floor from 3 to 3.5% on bonds. He says this reversal of the summer rally looks a little bit overdone. Leave it to the bond bull himself, Stephen Major. That's it for Brief. Surveillance is right ahead with John and the team.
will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
The United States is a clear leader in AI, along with a number of the European countries, and those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
They're the
on
people
a practical level,
who deal the cards.
is it getting harder
whether it's
to manage
fire
the risks you
or
face?
electricity, for good or bad, or the cotton gin, or the iPhone, or the atom bomb? Those are the cards, and the rest of us just play it. Would you agree with that assessment?
I think technology is the thing that causes these big step changes in civilization. So obviously you've got things like, say, the Gutenberg press, before which it was very difficult to get books. They were very rare. Even if you had a thirst for knowledge, you really couldn't do anything about it because there were very few books to read. So, and the internet is something beyond the Gutenberg press, I think. But you know, when I first saw the internet coming into being in a way that the general public could use it, it felt like the humanity as a whole was developing a nervous system. So previously, the way the information would travel would be by osmosis, one person to another, or one person calling another. But the access to information was very limited. Now with the internet, it's like having a nervous system. It's like any part of humanity has access to almost all the information of humanity. Like you could be in the middle of the Amazon jungle with, say, a Starlink terminal and have access to more information than the president did in 1980.
This equity futures on the S&P 500 slightly firmer by not even 0.1%. Coming into Thursday with this equity rally through this week, losing just a little bit of steam. That's the equity market. Here's the bond market. Price action yesterday really interesting. CPI comes out, 2 years anchored yields drop. The 10-year yields continue to creep higher. The 10-year this morning, 445.51 on 10s. The 30-year 462, the sneak peek of the day ahead, the next 24 hours looks a little something like this. 8:30 Eastern time, jobless claims, and then this afternoon, Chairman Powell speaks at 3 p.m. Eastern. Before we get there, the main event in the last 24 hours, Anne-Marie, a trifecta in Washington.
The Republicans were poised to have this trifecta, and now they've gotten it over the finish line. We still don't know yet, though, Jonathan, how big that margin is going to be, or rather, we should say how slim that margin is going to be. Historically, this might be one of the slimmest controls of Congress Speaker Johnson is going to have to deal with. With that all being said, he already has problems on his plate. He needs to fill 3 of those seats. Elise Stefanik, the representative from New York, is being plucked from the incoming Trump administration to go represent them at the United Nations. Then you have Congressman Waltz of Florida. He's going to be Trump's national security advisor. And then late last night, Matt Gaetz, the Florida congressman, resigned. Now, many will tell you potentially on the Republican side he resigned because he's being tapped for attorney general. No. Punchbowl News reporting that a House Ethics Committee was going to come out with a report, and once you resign, that report dies.
Well, it's the thinness of it that I think this market needs to be paying attention to, because we've gotten so excited about deregulation, about tax cuts. A tax fight is about to be underway. If you have such a slim majority, Can you deliver on all the promises that this market believes it's going to have and is trading near all-time highs?
Got to work out the sequencing as well. What's the priority going to be? Is it going to be the push for tariffs? Will it be the push for tax cuts? Equity futures right now on the S&P positive by almost 1/10%. Check out the FX market. This is one to watch. Euro dollar coming very close to a 104 handle, 105.09. We're negative 0.5%. More dollar strength, more euro weakness. Coming up this hour, we'll catch up with Keith Lerner of Truist, expecting the bull market to power ahead. We'll speak to Rob Casey of Signum Global Advisors as the Republicans secure the trifecta. And Alcelinos of RBC saying US dollar strength is here to stay. We begin this hour with stocks on hold ahead of fresh economic data. Traders awaiting US PPI and jobless claims at 8:30 Eastern Time. Keith Lerner of Truist writing markets are pricing in most of the positives today, though the backdrop is complex. Still, the weight of the evidence in our work indicates the bull market still has some longevity left. Keith joins us now for more. Keith, welcome to the program. Let's start right there. Why do you believe this bull market has legs?
Yeah, well, first, great to be with you all. Well, I think this bull market has proven time and time again that it deserves the benefit of the doubt. And if you take a step back, we still lean bullish. I also think the range of outcomes as we move into next year is going to be wider for all the reasons you all discussed this morning. But again, when we look back historically, the bull market's up about a little bit less than 70%. That's still below average on a 3-year basis. We're around the average type of return. The earning trends for the market are still moving higher, so I think that's positive. The Fed just cut rates. Global central banks are still easing as well. Valuations are rich. Sentiment's a little bit stretched, but we all know on a short-term basis, it's really hard to make a valuation call by itself. And I do think as we move into next year, you talked about deregulation, lower taxes likely, and that's going to be offset by the unknowns on the tariff side. So all in all, we still, like I said, lean bullish.
We know the risk factors. Tariff is part of that. We've got the trifecta, Keith, but very small margins in the House. Have you taken a view on what the sequencing will be for policy?
Yeah, well, I think no one knows for sure, but we do know that tariffs can be done unilaterally, or at least to a certain extent. So I suspect you're going to see that up front. It's interesting when you go back to 2017, the corporate tax rates didn't actually get passed until the end of the year. It was almost good that it was out there lingering that, hey, this is coming, so let the market continue to move up. So I think tariffs probably first, and then you'll probably see more discussion around the tax cuts. But also, part of the reason why the bond market isn't responding even more vigorously is that any type of tax cuts is going to be a lot different or a lot less than what we saw back then.
Keith, when it comes to the tariffs, though, do you have a base case of whether or not we're going to see 10% ring around the United States, 60% on Chinese imports, or do you think it's going to be a negotiating tactic?
Yeah, I think we're all guessing, right? I mean, from the history, we suggest that it's going to be more negotiation, and I think there's also going to be a difference when we talk about tariffs. A lot of this is kind of lumped together. There has to be a distinction between what happens with China and then what happens with the rest of the globe. I mean, obviously, President Trump sees China as a national security risk, and therefore implementation there is likely going to be, quicker and faster. The rest of the globe, it's probably will be that will be part two, I think. But I mean, all in all, though, we also have to be careful. If we go to 60% on tariffs there, it's a sales tax. So on the consumer side, we're going to see that move up. And how much does President Trump want to see prices moving up right away? So I think part of it is going to be negotiation. We don't expect it's going to go to the 60%, but I certainly do expect some tariffs to go into effect and China to be number one on that list.
Keith, we got a number of nominations yesterday, and many are saying, especially many lawmakers in the Senate that would have to confirm these individuals, are shocked and think some of them are unconventional. Do you think that could degrade Trump's priorities and potentially be market negative?
Well, I think as we have continued political uncertainty, it just, again, to my point earlier, leaning bullish, but the policy outcomes is wider. I just think we're going to have to deal with this kind of on a day-to-day basis. There's some good and bad aspects, right? Maybe, with such close margins, transformational change will be somewhat more challenging. But if he doesn't get something done through Congress, then he may look at what he can do unilaterally. And one of those things is things on terrorist, immigration, things of that nature. And so I just think we're going to have a lot more to write about next year, and a lot more twists and turns. But again, when I think about the market perspective, I still have to go back to, okay, is the economy likely to go into recession next year? Our answer is no, right? Because we're extending those tax cuts. There might be some more policy uncertainty, but I don't think Trump, who partly campaigned on a better economy, wants to see the economy go into recession the first year. So as a starting point, that's a positive for the market because that should then support corporate profits into next year, which are expected to grow, double digits into next year.
When it comes to corporate profits, though, Keith, if we have a scenario where big global American companies are abroad and they're basically confronting a scenario where they need to move back to the U.S. or face higher tariffs, is that not going to be an issue with margins? Are they not going to have to do more profit sharing with American workers? Are we about to see a squeeze on the horizon?
And I think there will be to a certain extent. I think the question becomes what industries, but on the margin, yes. But there's also on the other side of that, if you do have somewhat lower taxes, there's going to be some offsets. And there's also, going back to margins, another part of the margin story is what interest rates are. We know corporations, a lot of them are locked in at lower rates. We still think the Fed actually still moves lower next year, even if they do it at a slower pace. But so yes, what we're talking about this morning is just a huge range of cross currents. I do have confidence, though, that once we know the rules of the game, corporations will adjust. If you think about the last 5 years, we had a once-in-a-generation pandemic. We saw the highest inflation since the 70s. And what have we seen corporations do? They've had record corporate profits year after year. So I think initially they will be hit. Some industries certainly will get hit more than others. But eventually corporations, like they always do, they will adjust.
Keith, just given what you're saying and all the different cross currents, how difficult is it to be a medium-term investor right now? How difficult is it to build a portfolio for the next 4 years when we just don't know how things will shape up?
The future is always uncertain. And I would say as you extend your time horizon, even from 4 years to 10 years, the probability of success is actually improves when you look at just regardless who's in the White House. So listen, I know where there's so much focus, especially after the election, on just the election, on the policy out of Washington. But we also have to remember that institutions and corporations, are a big driver of the overall economy. So, from our standpoint, we are still positive on equities on a relative basis for the next 5 years, for the next 10 years, even though I think as we move into next year, this really serene environment that we've seen this year, like the market up 25%, pretty low volatility is likely going to shift. I think the underlying trend is still positive, not only for the U.S. economy, but for U.S. corporate profitability as well. And the one thing we haven't talked about is also, technology, AI. An interesting note that I saw out of the Palantir earnings report, they talked about how that one of the major insurance companies, as far as for underwriting, they cut their process, they automated it from like 2 weeks to 3 days. And then talking about the government side, they talked about disclosures that the government has to give to their to foreign governments around just intelligence sharing, that they cut that from 3 days to 3 hours. So there's also a productivity side of things that I don't think should get lost because of what's happening in Washington.
That stock's been on fire. Absolutely ripping over the last few weeks, that's for sure. Keith, I want your thoughts on NVIDIA. Reports a week today, I think. How NVIDIA dependent do you think this equity market still is, given the big changes we've seen post-election?
Yeah. Well, I think what's going to happen as we kind of move past a couple of weeks past the election, we're going to get back in focus. And I think that's a very important report because technology is over 30% of the market. Semiconductors have been making relative lows. It's really, it's NVIDIA, Broadcom, and then everyone else. And there's huge divergence within tech. Software is doing better, but I still think with such a big allocation and the Mag 7 being such a big part of the market, that report next week is really going to be important. And also to our thoughts that there's more to go in this rally. If that were to, to not meet expectations, which we think they will, that could be obviously a risk for the year-end rally that we're expecting.
Hey, Keith, good to catch up. Thank you, sir. Keith Lerner there of Truist. Keith mentioned Palantir. That stock is up by 46.58% over just 7 sessions. With an update on stories elsewhere, let's get to your Bloomberg brief with Yahara Hackers. Hey, Yahara.
Hi, John. President-elect Donald Trump continues to fill out his cabinet. Former Congressman Matt Gaetz has been tapped as Attorney General designate, while former Congresswoman and former Democrat Tulsi Gabbard is the pick for Director of National Intelligence. And Trump confirmed Senator Marco Rubio is his pick for Secretary of State. But Treasury Secretary is still unknown. The Wall Street Journal reporting Cantor Fitzgerald CEO and transition co-chair Howard Lutnick is making a late play for that role. Meanwhile, the sweep is complete. Republicans have maintained their majority in the U.S. House, giving them unified control of the government. The Republican win strengthens their hand to enact immigration controls, reduce regulations, and extend tax cuts. The trifecta control sharply diminishes any hope for Democrats to curtail Trump's sway over next year's big fights over trillions of dollars in expiring tax provisions. And Manhattan apartment rents climbed in October to the highest level in 3 months. No relief. The median rent in the borough rose to just under $4,300. That's a 2.4% increase from a year ago. Analysts say that would-be homebuyers put off by high rates are keeping the rental market active with high demand. New lease signings in Manhattan surged about 24% in October from a year earlier. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara in about 30 minutes' time. Up next on the program, the Republican trifecta.
It could be, I believe it will be, the most consequential Congress of the modern era, most consequential administration of the modern era, because frankly, we have to fix almost every area of public policy.
That conversation up next, live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Keely Lyons deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Check this out. Euro dollar, seconds ago, 104 handle. Lower the session, 104.97. Right now, 105.04. The target from Jordan Rochester over at Mizuho, 103 year end, 101 by the time we get into the next quarter. I don't know if we make it to the end of the year before we get to parity. 105 on euro dollar, Danny. This is quite a decline, a 5-day streak of weakness for the euro.
It could get even worse than all those estimates. George Saravelis at Deutsche Bank says that if we see the full force of Trump policies, we'll see below parity. We'll see 95. Just a very basic Trump tariffs, maybe a slight tit for tat. That will be parity. That is his base case.
Al Salimios of RBC joining the program just a little bit later. Under surveillance this morning, the Republican trifecta.
The theme that you'll hear over and over from all of our members across the conference is that we are unified and energized and ready to go. Serious times call for serious leadership. It's going to be a policy agenda-driven administration and a Congress, and you've heard us say many times that it could be, I believe it will be, the most consequential Congress in the modern era, most consequential administration in the modern era, because frankly, we have to fix almost every area of public policy.
So here's the latest. A red sweep taking over Washington as Republicans secure a House majority, holding at least 218 seats with a razor-thin margin. President-elect Donald Trump's priorities coming into sharper focus. Rob Casey of Signum Global Advisors saying, we believe President-elect Trump and trade advisor Robert Lighthizer are committed to implementing an aggressive tariff agenda, likely beginning with Europe and ending with China. Rob joins us now for more. Rob, good morning.
Hey, John.
The sequence, it's a big focus for financial market participants worldwide. You think that it's going to start with trade and it will start with Europe. Why?
Yeah, well, first and foremost, it's not to say that we don't think that they're not going to wait on China for very long. But we do think that Europe is the day one priority, mostly, you know, speaking very bluntly, because we don't think Trump likes Europe a whole lot. And you know, essentially, we're dealing with what is not a net neutral landscape, but a net negative landscape. CBAM, deforestation, steel, Airbus, there are all of these tripwires that, you know, the pro-EU presidency of Joe Biden was not able to deal with, was not able to handle. We think Trump comes into office essentially with all of those tripwires laid out, not really looking to avoid them.
Ron DeSantis, the governor of Florida, is in Italy right now on a trade mission. Who do you think Trump views as someone he could work with in Europe?
Well, I think it's Orban first, and then when Trump realized that Orban actually doesn't have a whole lot of power in the EU, it will be Meloni second.
So when it comes to the tariffs, and if you think they're going to be enacted first, personnel is policy, as you know, in Washington, D.C. Where does he put Lighthizer?
We think Lighthizer could be at USTR. He could go back to USTR. But, you know, if I'm Robert Lighthizer, honestly, I'm looking for a slightly larger portfolio, a little bit of a bigger role, and that could be a commerce.
That's tariffs. Let's talk taxes. Let's talk about what can actually get through Congress and your view on what took place in the Senate in the last 24 hours. How constrained will this presidency be by a Senate that, for some people, stared down the president-elect and made its own decision about going a different way?
Yeah, well, I think we can all be sort of relieved and happy that it's going to be John Thune, who is, to his core, an institutionalist. So to the extent that it's not Rick Scott, John Thune presents a little bit more of a constraint. But, I mean, he's got 53 votes in the Senate, so I don't think it's going to be a huge constraint moving forward.
But Senator Thune has said he will not get rid of the filibuster. So basically, the only thing that the Senate can do with that kind of majority at 53 is tax and budget, correct?
Yeah, totally. We think it'll be a very big budget reconciliation package. You know, they're talking about getting it done in the first 100 days of the term. I think that will be exceedingly difficult. We also have to realize, frankly, that we're running up to a budget cliff in December as well. So they're going to have to pass a CR in the short term with the current Congress. If they pass it out to January, February, they're going to have to deal with that first, a larger reconciliation package after that. But there's now talk about extending the CR to September, October, November to give them kind of that first 100 days latitude to get the budget reconciliation deal done.
So with Thune at the helm, what do you make of how the confirmation hearings are going to go?
Well, I think we can safely say, or at least I will predict that Matt Gaetz does not get confirmed as Attorney General. So he may wind up being sort of the sacrificial lamb of the cabinet picks. I think everybody else probably gets through. Again, Trump can lose one or two Republicans in any confirmation vote and still pass his nominees. So, you know, Hegseth probably going to be a longer, more difficult process, just given that he's not really on the books regarding policy at all. I think Matt Gaetz is probably the one who's struck down, and everybody else probably gets through.
Hegseth and Gaetz, though, showed us that Trump is willing to nominate people who hadn't been on anyone's list. I don't think anyone expected either of them to be put up for these jobs. Does that show us that maybe we're too sanguine, that when it comes to Treasury Secretary, we'll get kind of a classic pick, a market-friendly pick?
On Treasury, I mean, I think it's going to be Besson or Lutnick, frankly. So to the extent that that sort of hems us in, I think that's good news. But we have to be honest in saying that Trump received whether or not it was a landslide, I think is up for debate, but a national mandate, right? And he's going to put people into these jobs that A, he likes, and B, we're very loyal to him. And he's not really going to apologize for it. He doesn't have to apologize for it. He won the national popular vote. He's got a Senate majority. And so do I think we could get more surprises from here, or at least really more Trump accolades from here, whether or not that's a surprise? Yeah, I think we could.
But does Thune's lifting up as leader not show us that there is some resistance to some of Trump's ideas and who he wants?
There is some, I would say there is some resistance, or at least it's clear that the Senate isn't going to just roll over for Trump every single time, right? And I think John Thune he'll be a very good majority leader. He'll be a strong majority leader. And to the extent that he wants or has to stand up to Trump, I think he will be able to. That being said, though, on policy, right, on tax policy, on tariffs, et cetera, I think most of the Republican majorities in Congress are in line with Trump. So Thune is not going to stand up on policy. He may stand up on some of these personnel decisions.
When Trump went to the House the other day, when he also had the meeting with Biden, he brought Musk alongside him. I just wonder what the presence of Musk, who has become this huge donor for the Republican class, does to affect sentiment in Capitol Hill. Is there almost an element where they need to follow the money and that Musk represents a greater threat to them and maybe even funding challengers to those who don't support Trump?
Yeah, well, I think one of the biggest stories over the next 2 years may wind up being Trump and Musk falling out, just because it's two very talented political individuals, two very big egos in the same room together. That only worked for so long, right? So it seems as though Musk is attached to Donald Trump's hip at this point. He's running this government. He has this government efficiency mandate now. We'll see how that goes. Do Republicans want to keep him on sides, at least until the midterms? Definitely. Will Trump be able to? Will it keep him on sides and keep it friendly? I honestly think it's easier said than done.
Do you think Democrats could have avoided this if they'd shown as much love to Elon Musk as they had shown to Murray Barra of GM? Could this all have been avoided?
I mean, yes, but I also think that in terms of Trump's not cabinet, but kind of broader universe, it was there for the taking from Musk. It was there for the purchasing, and to the extent that Democrats were nice or not to Musk, I think less important, because Trump was able to give Musk really what he wanted, and that is power.
John brought up the Democrats. Yesterday, there was a report that the reason why Kamala Harris didn't sit down with Joe Rogan and tap his 15 million subscribers is because they were worried about the progressive pushback. How does the Democratic Party pick up the pieces?
Well, there's going to have to be a reckoning for sure. And obviously, in this global landscape, it's hard for any incumbent administration to get reelected, right? We haven't seen that happen across the board this year. So I certainly think Kamala Harris was running from behind almost from the get-go. That being said, Democrats have sort of installed this message that is incredibly left on social issues and actually pretty moderate on economic issues. And frankly, I think most voters want the opposite, right? They want a populist economic policy. They want an economic policy that's going to lift up manufacturing, lift up the working class, and they want to hear less and less about some of these social issues. And so I think Democrats essentially have to inverse the message.
The midterms are in 2 years. How do they prepare for that?
In these 2 years, I think it's going to be very hard to turn the party around 180 degrees, right? It's hard to steer a really, really, really big boat with a really, really, really big bureaucracy. That being said, I think for the next 2 years, essentially, they are going to tit for tat against Trump. They're going to be able to run against Trump in the midterms. Most of the time, an incumbent party does not do very well in the midterms, as you all know. I think for Democrats, the bigger issue, the bigger challenge is just what is the proactive sort of positive message for their Democratic nominee. And it's going to be a major fight. We're going to see 10 to 20 folks in that nominee race. And so the question is, what is the message from the primary that emerges? It's 4 years from now. We just stopped talking about this.
I was going to ask you, have you got a name to watch? Have you got a name in mind?
I think Pritzker from Illinois is sort of my dark horse candidate. Not a DC figure, but he can be, Democrats' billionaire in relation to Trump. He's tough talking. He's come out post 2024, strongly in favor of many Democratic messages and strongly opposed to Trump. And I think it's a strong figure that's going to have to be at the top of the ticket for Democrats to compete in 2028.
Rob, appreciate it. It's good to see you, sir.
Thanks.
Thank you. Rob Casey there of Signum Global Advisors. We need to talk about this FX market. Next year, not much clarity, very cloudy outlook. But where you have conviction right now is in foreign exchange. Most people believe the policies that will come out of this White House will lead towards a stronger dollar. And a stronger dollar is what's being priced right now. Euro dollar moments ago dropping to 104. Right now, 105.08, a new low for 2024 on euro dollar and seemingly heading towards parity. I cannot find a single person right now who is bullish on Europe. We'll have that conversation next. We'll catch up with Al Salinas of RBC on a rip-roaring dollar rally. From New York City, this is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
So a week today, we get earnings from NVIDIA, and then we won't be talking about a Trump election win and policies from the White House for the best part of 5 minutes. We'll be talking about the NASDAQ 100. NASDAQ 100 futures right now up by 0.1%, but once again, the outperformance on the small caps, and you know why. The small caps on the Russell right now up by 0.5%. In the bond market, really fascinating price action in yesterday's session, Danny. Just this tug of war between what was happening at the front end of the curve and what was developing further out along the curve on a 10-year. Seemingly, this Fed has got a bias to ease. And seemingly the CPI data of yesterday leaves the door wide open to cut rates in December. But for many people, that easing bias is contributing to longer rates pushing higher, and they pushed higher again in yesterday's session.
Right, because you get 50 basis points of cuts and we're off to the races, and that's even before you count in the politics. The market was happy to price in 80% odds that we will get a cut in December and have long-term yields jump. It's almost as if this market is talking out of both sides of its mouth. Part of the problem, John, is the Fed itself. We heard from a lot of Fed speakers, we hear from Powell today, and they're having a completely different conversation than the market's having.
Like Europe right now, having a very different conversation to the one that we're having stateside. The same policy producing very, very different, divergent consequences for Europe and the United States. Euro-dollar breaking down to 104 for just a second. Right now, euro-dollar 105.07. It's a fifth day of euro weakness, and we all understand the policy. Let's take tariffs. If America puts big walls up around its economy, most people assume that's going to lead to higher interest rates, higher yields, and ultimately a stronger US dollar. What it means for Europe, we've talked about this a million times. One aspect of this story, there is overcapacity coming out of China. Who's going to have to eat it? It will have to be the Europeans. What will this mean? Could mean a disinflationary bust in the European economy. And if you're thinking about divergent interest rates, the ECB has to cut a ton more than what you might expect from the Federal Reserve.
Yeah, but even before you get that, because of the stronger dollar, you get tightening financial conditions in Europe, and you get an ECB that needs to respond by cutting more. And then the dollar strengthens more, and then they need to respond more. It's this doom loop that, again, could also be exaggerated by China. The pain is in the euro because, for example, you look at the yen, that's at 156. It's under stress too, but not nearly as much as Europe. And that shows why this currency story, it's about trade.
Look out for Al Salinas of RBC in just a moment. Under surveillance this morning, President-elect Donald Trump nominating Matt Gaetz to be Attorney General. Gaetz resigning from Congress after the announcement, ending a House inquiry into sexual misconduct allegations against him. Trump also tapping Tulsi Gabbard to run national intelligence and Marco Rubio for Secretary of State.
So on that board right there, you have a conventional name like Senator Marco Rubio, which is going to get a lot of bipartisan support when he goes up for his confirmation. Then you have these unconventional, unorthodox names like Tulsi Gabbard, who's been a bit very friendly to Russia, an individual who has sat down with Bashar al-Assad and said he's not an enemy of the United States. And then, of course, there's Matt Gaetz. Terry Haynes put it best today. Trump's second time around started out looking like a more professional, focused, mature operation. Turns out that was on Monday. And when it comes to Gaetz, he resigned, and that means that that House ethics investigation, which we now know from Punchbowl News on Friday, they were going to vote on whether they should make it public, that dies.
This is very distracting. This market is still very focused on one position, Treasury Secretary. You said to me the other day, and I want to share this quote with our audience because I think it's a good one, the producer of the show wants to be the star. And the producer of the transition team The co-chair is Howard Lutnick. And Howard Lutnick is putting his hand up, according to reports, and saying, I want to be the guy, I want to be Treasury Secretary.
Wall Street Journal front page is saying that he went to Trump and said, I want to be the Treasury Secretary. He sat around this table, and I've had conversations with him as well, where he said he is out there looking for the best names possible to staff this government. Well, it turns out he's looking to staff himself, which is why I said, he's the producer. He's supposed to be organizing the staff, but actually now he's throwing his name into the ring.
Who knows how well received that will be from Trump, but I do think it's a real risk we need to consider with Gates' appointment, with Hegseth, that we get someone totally unexpected. Just going back to the Gates point, literally everyone on Polymarket got zeroed out. Nobody was betting on him. I think there is a real risk that that could happen for Treasury Secretary.
Well, here's the thing, though. Then you look at the other most important cabinet pick. Arguably, for the market, the two most important cabinet pick is going to be Secretary of State, Secretary of the Treasury. Secretary of State went with someone that everyone in Washington is saying, this is someone that is serious, this is someone of significance, and has serious depth on the policy issues. If you are President-elect Donald Trump, and you know that the markets, and we all sit around this table and talk about how he's regulated by the Dow Jones Industrial Average, if you know that those are the two most important places for where personnel means policy, that's maybe one where you're not going to take someone out of left field.
Which is why most people think still the favorite is Scott Bessent, right?
That's right.
Look out for that. Maybe we get an announcement. If you wanted to schedule this as a TV producer, when would you do this? Sunday night?
I would do
Tonight?
it either this evening
before
Friday morning, so we can all sit around this table and decide and talk about the horse race, or Sunday evening.
Hopefully we get it this evening. Let's talk about Republicans keeping control of the US House, scoring a trifecta in Washington. The win limiting curbs on Trump's power and making it easier for the party to enact potential immigration controls, reduce regulation, and extend tax cuts. What can we get done with a slim majority that we currently have?
What we can get done with a slim majority is tax and budget. Everything else, through the Senate, which is going to be the main gatekeeper, would have to get over 60 votes. Right now, they can get what they want done on the budget through reconciliation with this slim majority. But other than that, it's going to be very difficult. But that's why the market likes it. They're straight away looking at tax cuts.
This is the trifecta this market was looking for at 7:30 on the evening of the election win of Donald Trump. I want to turn to the latest in the Middle East. The Washington Post reporting Israel is rushing to advance a ceasefire deal in Lebanon. Officials telling the Post Israel is aiming to deliver an early foreign policy win to President-elect Donald Trump, calling the potential deal a gift.
This comes after Ron Dermer, according to the Washington Post, went to Mar-a-Lago, an individual, Jonathan, you and I speak to quite a lot. This is the main brain trust for Benjamin Netanyahu. What's going to be interesting about this is the work is being done on this ceasefire with Lebanon agreement right now by Brett McGurk and Amos Hochstein of the Biden administration. So if they were gifted this when Trump walks into office, you're going to have both sides basically saying they're going to take credit for it.
This news cycle is moving so fast. Do you remember this back in 2016, 2017? I'd forgotten all about this. You step away from the phone for like an hour, you come back and it's just headline after headline.
Well, the other element to it that I think we all need to remember is that so much of the news happened overnight. I actually remember at the time that just even tracking the market, the volatility overnight was bigger than that during the day. So I think we need to get used to that also, maybe not sleeping or maybe waking up early and saying, oh, that's a new policy.
When President-elect Trump was 45, I was in places like Tehran, in Moscow, in Riyadh, where he would tweet and literally meetings would move. These oil ministers would freak out over what he was saying about the oil market and have to quickly go into another room and decide maybe we need to change our approach here because of the man we're dealing with.
He got a seat at OPEC. Not literally, but kinda. Let's turn to foreign exchange. Dollar strength continues in the aftermath of Donald Trump's election win. Euro dollar briefly touching 104 this session. Al Salinas of RBC seeing more room to run for the dollar, writing, the fact that the US dollar is already strong creates a high hurdle for further gains, but a few things make us think dollar gains are not yet exhausted. Alsa joins us now for more. Alsa, welcome to the program. Share some of those things. What are those things that give you some confidence that maybe this is not exhausted?
But I think we first have to take into account what the starting point was, right? For some people, it was 112. That's where we were in late September. That, for me, is not the starting point. That was a condition where we were pricing in real weakness in the U.S. economy. People had freaked out over the softness in payrolls over the summer. People were talking about back-to-back 50 basis point cuts. That's not the neutral starting point. For me, the neutral starting point is 108. And bizarrely, we were at 108 just a week ago. I mean, I was here on Bloomberg with some of your co-hosts on 3 days after the election, and Euro-dollar was just shy of 108, and it just felt strange, you know, with Trump having won effectively the trifecta, on track to win the House as well. The fact that Euro-dollar was still sitting at 108 48 hours after the election didn't make a ton of sense. Now here we are, 105, as you mentioned earlier, 104 handle. We've gone further towards pricing in a more aggressive version of Trump. But as he's shown with some of his policy picks, this is not going to be a conventional administration. And so for me, there is still room for this to run a bit more.
Elsa, I can't find a single person that likes Europe or the euro. I mean, I like Europe, we all like Europe, but likes the European economy or the economy's currency. I'm looking at spreads, 2-year. The differential between Europe and the United States, that's gapped wider to 220. That's the spread between the front end of the German curve and the front end of the US curve. Back in September, that was as low as 135. So rates have done a lot of work already, Elsa. Do you think it's sufficient to sit here and say we've priced in a lot of the rate divergence, maybe it's time to get along the other side of the trade?
So, funnily enough, I was asked that same question a week ago, and back then I was definitely no way. Today, it's a little bit more two-way, but here's why I still think it has a bit more room to run. We've heard a lot of people talking about the German election and the room that creates perhaps for some fiscal stimulus. I do think you'll get some slightly easier fiscal policy out of Germany, but it's not going to be the bazooka, the game changer that leads to a real re-rating of European growth expectations. What we're talking about here in terms of tariffs, I don't even think Trump's necessarily going to go after, as aggressively go after Europe. But if he goes after China, we're talking about diversion of trade. Europe is going to be competing with China for that rest of world export market. And we know that a lot of Europe's growth in the last 2 years has been driven by exports, not by domestic consumption. So until that changes, until we see signs of that changing, I don't see this as having kind of run its course.
Also, which is the bigger loser here? Is it Europe and the euro, or is it Mexico and the peso?
But I think part of the reason people are positioning in the euro and a little bit more cautious with the Mexican peso is this is a trade that it's hard to time, right? Trump doesn't take office until January. A lot of the initial policy moves may take 2 or 3 months to fully play out. And so Mexican peso is kind of a difficult currency to sit in there and wait for it all to play out, paying the negative carry. With Europe, you don't really have that problem. Another one we haven't really talked about, the Korean won. You know, you have the intervention there, or the kind of perception that the central bank is really sitting on dollar Korea so that it doesn't move materially higher. But again, you don't have the negative carry working against you. And I think that is what investors are looking for at the moment, these positive carry trades that also benefit from potential escalation in trade war.
How do you disaggregate at the moment, especially when it comes to the dollar? How much of that is about Trump, is about preparing for tariffs? And it's just been the strong data we've seen, Elsa, has been the robust growth that we continue to enjoy in the U.S.
Right, and for me, that's why I said a lot of that move from 112 to 108 was really much more about the data than pricing in anything specific to Trump. I mean, I really think in the first few days after the election, a lot of investors I spoke to were either saying this makes no sense, or were saying he's not going to be a CEO, a kind of active interventionist. He's going to be more chairman. You know, as I think John said earlier, he's regulated by the Dow Jones. You know, if he pursues policies that aggressively weaken the equity market, then he'll stop and pause for thought. But the reality is there's actually quite a lot he can do that's quite damaging to other countries without damaging the US itself. If anything, helping the US, even helping in certain cases equities, particularly the small caps you mentioned earlier. And so for me, when you look at where we stand at the moment, a lot of what we saw through October was about the US data, the strength of the US data, even early November. It's only really now that we're starting to price in those more extreme Trump policies potentially.
Elsa, I'd love to get your thoughts on the yen as well. This morning we're at 156 yen. Do you expect some verbal intervention coming out of Tokyo?
Yeah, absolutely. And I think we've seen a little bit of that already with the comments from Kanda earlier on in the week. The yen is an interesting one, I think, because it was the biggest loser last year, the year before, when we were seeing the real repricing of US rates. For me now, I'm actually a little bit more cautious. And you know we've been yen bears for a very, very long time. That's not to say that I don't see dollar yen going up. I do. It's just not the most obvious way to express the dollar strength for me in that kind of trade war world, not least in part because if I look at the yield that Japanese investors are running on their overseas stock of assets, it has actually been creeping up over time. So unless you get the Fed actually back to hiking rates, then dollar yen is not the runaway trade to the top side that it was in years previous.
Well, then what's your favorite in terms of the top three to express that dollar strength?
So I do think dollar Korea has that real room to the top side. We've not really seen it yet. Euro dollar for me has a bit more room to run to the downside. Actually, for yen, I'd almost be taking the other side of that trade, not against the dollar, absolutely not. But Swiss yen is one we've been watching for a while. We dipped our toe into it. It didn't work initially, but it now appears to be breaking lower, breaking that rising up trend. And so that's one I've got my eye on.
Elsa, always appreciate your time. Thanks for this morning. Elsa Linios of RBC, following a new low for the euro in the past 15 minutes or so on euro dollar, breaking down to a 104 handle. Moments ago, numbers from Disney, a beat on the top and bottom line, and the outlook, a 3-year outlook. Take a listen to this. Disney projecting high single-digit growth in earnings for fiscal 25, double-digit profit increases in 26 and 2027. That stock is falling just a touch. We'll get some more detail for you in just a moment. We're down about 3.6% in the pre-market. With an update on stories elsewhere this morning with your Bloomberg Brief, here's Yahara Hacker. Say, Yahara.
Hi, John. Shares fell in Taiwan for key iPhone assembler Hon Hai. The reaction coming despite the company, also known as Foxconn, reporting stronger than expected quarterly profit. Boosted, of course, by high demand for its servers, powering out artificial intelligence. Putting a number on it, Hon Hai expects AI server sales to make up 50% of its total server business in 2025, but it did caution that its smart consumer products business will show a decline this year. Meanwhile, the Pennsylvania Senate race is headed for a recount. Right now, Republican Dave McCormick leads incumbent Bob Casey by around 30,000 votes, which falls within the range for an automatic recount. This is just over 80,000 provisional and mail-in ballots have yet to be counted. Casey's campaign has refused to concede the race despite multiple news outlets calling it for McCormick, who gave a victory speech in Pittsburgh yesterday. McCormick's win would give Republicans a crucial 53rd seat in the Senate. And New York Governor Kathy Hochul plans to relaunch congestion prices for drivers entering parts of Manhattan. The move coming months after she abruptly pulled the plug on a $15 charge just before it was set to start. Now she's expected to announce a new initiative today, this time with a $9 charge. President-elect Donald Trump opposes the plan, and with his inauguration scheduled for January 20th, the governor has limited time to avoid the incoming administration blocking the program. That's your Bloomberg Brief. John?
Yahara, thank you. This right here is why people don't like politicians. That right there, that story. They basically don't go through with it. They wait for the election. A week later, they start going through with it.
Well, they're going to have an opportunity at some point to vote politicians out or vote them in. I don't really see anyone in New York being on board with this congestion pricing.
Absolutely not. Up next on the program, inflation. Back in focus.
Right now, I think that inflation is headed in the right direction. I've got confidence about that. The bigger risk that I'd be concerned about on the inflation front is just if we're landing at around the 2.5% level instead of back down to 2% level.
That conversation up next, live from New York City. This is Bloomberg.
Missed it on Bloomberg Technology.
We're excited to really change the expectations for space companies where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid or of your cell phones. And so we think that this is a huge opportunity space, and our first contribution to it is through shared infrastructure.
You can see this whole ecosystem developing, and you have an exponential growth right now because
easier access to space means more demand for space, and that's the definition of an exponential growth function. So if you think about someone like Varda, who is only possible now because access to space is cheaper and easier, we're demanding more access to space.
I think that's what's so exciting from a business perspective, the fact that if you can do it, you're one of the few numbers of organizations in the history who've actually pulled it off. And so it creates a very defensible position, because again, space is very, very hard.
Don't miss Bloomberg Technology live every weekday.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, is a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Let's check out the price action together. Here's a snapshot. Equity futures just about positive on the S&P 500, up 0.1%. Bond yield still very close to 4.45 on a 10-year. Under surveillance this morning, inflation back in focus.
Right now, I think that inflation is headed in the right direction. I've got confidence about that, but we need to wait. We've got another month or 6 weeks of data to analyze before we make any decisions. The bigger risk that I'd be concerned about on the inflation front is just if we're landing at around the 2.5% level instead of back down to 2% level. I think that those risks existed before the election, and I think that there continues to be uncertainty now, and we need to just take our time, let the data come to us, and let that guide us.
So here's the latest. Traders adding to bets that the Fed will deliver another rate cut in December following yesterday's inflation data, as expected changes from the White House cloud the outlook. Kelsey Barrow of JP Morgan writing, the Fed remains on track to cut rates 25 basis points in December, even after cutting a total of 75 basis points at the last two meetings. The Fed still judges current policy as restrictive and the labor market no longer to be an inflationary force. We agree with the Fed's assessment of the current state. Kelsey joins us now for more. Key line there, Kelsey, and welcome to the program. The current state. Do you disagree with the Fed on the outlook? Because you get to speculate, even though Chairman Powell says they don't.
Well, I think that the current state is really all that we can really know. Beyond that, I think there's just really a lot of uncertainty about what comes next. And that's why when you look at 10-year yields and a fair value model, that fair value model, just looking at the current inflation data, the current labor market data, and the path for the Fed funds rate prior to the election, that would have told you that the 10-year yield right now is fair around 3.5 to 4. Now, obviously, that's not the environment we're in. We're dealing with a lot of uncertainty, increase in term premium, a range in that environment where pretty much everything's on the table for now until it gets taken off the table. You have to anticipate a much wider range for the 10-year Treasury yield.
What kind of range?
4 to 5%. I know that is 100.
We're right there in the middle right now.
Right. We are right in the middle of it. And I think where you will reach resistance is if you get to a certain level on 10s and a certain level on 10-year real yields, which I am watching. You're getting to around 2% on those, and that tends to be where risk assets start to wobble. I think you're going to see some resistance, and I think on the bottom half as well, you're also going to see some resistance. But we're still in this environment where anything is possible. And nothing has been fully taken off the table.
Well, to that point, we're going to hear from Powell today. Not only did he dismiss the politics, he dismissed the move higher in long-term yields. They're basically where they were when we last heard from him, so no reason to think he might be concerned now. But is this a bond market that's going to search for those levels, that's going to try to find those levels that does concern Powell and make him pay attention?
Not necessarily. It really depends on how the data is going to flow from now until the next meeting. So it was interesting, the reaction you saw to CPI. I think there was a lot of concern that CPI was going to come in hotter. Really, the debate we were having before the election was all about slowdown versus reacceleration. We're actually still having that debate today. That has not changed. So when you look at an inflation report that says, okay, things are fine, you know, we're not worried about reacceleration, we're gonna have the same back and forth and jitteriness ahead of the payrolls report as well. Now, we think that the more likely outcome is you're gonna continue to see things slow down, you're gonna continue to see things moderate, but in the event that things look like they're reaccelerating, and that's even before any fiscal stimulus, then the market will try to test the upper bands of those levels.
One asset class, though, that's been noticeably absent from this debate and is only caring about reacceleration is this credit market, with IG spreads at the tightest of this century. As we go back and forth in this debate, and if the reacceleration narrative picks up again, where does this market go? Can it really get any tighter than it is now?
I think it can. So this is the way that we've been thinking about portfolios. I was here on election day, and we were talking about the fact that we didn't have any information advantage to really be taking a directional view on duration ahead of the election, right? We were hoping to see some types of dislocation. Now, I think in the rates market, we haven't seen a lot of dislocation. The move has been fairly orderly. What are we doing instead? Well, in duration, if you're in a benchmark account, we're staying pretty close to home. If you are in an unconstrained account, move that duration somewhere else, like Europe, where I think the story is increasingly diverging from the US. But outside of your duration positioning, the one area where across the board we've continued to embrace throughout the year has been credit. And that's because, you know, the most of the year, credit has been just grinding tighter because we've been in an environment of the soft landing. Now, we're still debating that soft landing, but we have the tailwinds coming from certain parts of the Trump agenda. So while I think we can debate from now and until the end of the show the direction for Treasury yields, where we do have a lot of confidence is on the corporate fundamentals, the strength in the credit market. And you know, the one thing that I've taken away from the last few weeks is there's always this battle between those who care about spreads and those who care about all-in yields. I think it's clear who's won that battle. It's the all-in yield buyers, right? They have been coming in, the demand has been incredible, and that's why in the month where we got the red sweep that everyone was talking about that was gonna blow the bond market out of the water, high yield total returns have been positive. Spread moves have offset the move higher in risk-free rates.
It's hard to argue with that. The market speaks for itself. Spreads are super tight right now, and they keep getting tighter. Kelsey, it's good to see you. Kelsey Barrett there of JP Morgan Asset Management on both treasuries and on credit as well. The next month looks a little something like this. The payrolls report, December 6th. CPI, December 11th. The Fed decision, December 18th. This is going to fly by. That's basically the road into year-end and the holidays. Coming up next, we'll catch up with Mohammed Al-Aaron of Queen's College, Cambridge. We'll speak to Heidi Kribo-Rediker of the Council on Foreign Relations, Eric Lee of Citi on commodities, and Dan Ives of Wedbush on why Tesla is flying high. From New York City, this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Yes, I don't know why, but for some reason I love thinking about black swans, and at the office everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
There's a lot of unknowns out there, and the unknowns are all around inflation.
Higher tariffs, deportations, and fiscal stimulus. That's going to tend to boost inflation.
What's getting a little bit messy is trying to figure out tariff impacts. And then you have the dollar moves on top of it, which makes it even messier.
The policy uncertainty is there, and policy uncertainty will continue. At the same time, the euphoria will continue for a while as well.
A tariff for a tariff will make the whole world poor.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance begins right now. Let's start with the price action. The outperformance on the small caps continues. The Russell up by 0.7%. The S&P up by only 1/10 in the bond market. Really interesting price action that we'll get our teeth into in just a moment. Yesterday, following CPI, 2-year yields declined. 10-year yields keep climbing. The 10-year stabilizing right now. The 10-year 4.44. The spread between Europe and the US bond market widening over the last week, and that's producing a much weaker euro. Euro dollar breaking down to 104 for the first time this year, a new low for 2024. That currency pair at the moment, 105.27. For the next 24 hours, this is where the attention will be in financial markets worldwide. We'll get some jobless claims data at 8:30 Eastern Time alongside the latest read on PPI. Then later on this afternoon, we'll hear from Chairman Powell at 3 p.m. Eastern Time on the outlook for the US economy.
I'm really interested to see whether he takes the bait at all to talk about these markets, because he can ignore all the politics all he wants, but the markets are sending a clear message. Lori Logan spoke about this yesterday. She said at some point they need to be concerned with the rise in bond yields because it's making financial conditions too tight at a time when they're trying to ease. Does it mean they'll need to ease more? It's a question she posed. Powell has stayed away from it, but maybe we'll get to the point where he can't avoid it.
This market is trading the outlook and speculating on the future of policy changes. And what did we hear from Chairman Powell in the last week or so? We do not speculate, which is why we're seeing so much daylight open up between how the Fed is talking about the future and how market participants are.
Well, the political economy is clearly going to be leading the central bank when it comes to 2025. They don't want to talk about it now, but they're going to have to start talking about it when there is going to be policy changes in Washington, D.C. What did we learn overnight? They were able to get this trifecta. The question is how big of the margin of that majority the Republicans are going to have in the House, but what they can do with a slim majority, Jonathan, has to do with taxes and has to do with the budget.
Priorities. What do you think the sequence is? What are the priorities now that trifecta is secured?
Well, the priorities for the market are very clear. Please get us that 14% corporate tax rate that you promised, even if with conditions. The issue is it could take a while for this to really turn through Congress, especially if you have a very slim majority. You can have 218 kings walking around thinking they're literally king of the hill and wanting something to receive for their vote. So potentially it could be tariffs, because that Trump can do unilaterally.
Which is what a lot of people are looking for. Equity futures on the S&P 500 right now up by 0.1%. Gave you a snapshot of things in foreign exchange. The dollar has been strong, strong, strong. It is again this morning. Euro dollar down by 0.33%. A fifth consecutive day of euro weakness. Coming up this hour, we'll catch up with Mohammed Al-Erin of Queen's College, Cambridge on inflation concerns, Heidi Kribo-Redeker of the Council on Foreign Relations as we await Trump's Treasury pick, and Dan Ives of Wedbush on Tesla's post-election surge. We begin this hour with the equity market rally stalling and 10-year bond yields inching just a little bit lower as a tug-of-war between the latest economic data and expected policy changes from the White House clouds the outlook for the Federal Reserve. Joining us now to discuss is Mohammed Al-Erin of Queen's College, Cambridge. Mohammed, welcome to the program, sir. I'm going to start yesterday. Going to go back to yesterday morning, 8:30 Eastern Time, CPI drops. We were looking for you and you weren't here. You're with us now. What's your response to that data, Mohammed? Because at the moment, the market is slowly gravitating to paying more attention to levels. The Federal Reserve at the moment seems to be more, I would say, gripped by the current trend and encouraged by it. What are you focused on?
So, John, sorry I wasn't with you yesterday. I was on the road. What I'm focused on is actually summarized really well by John Authors of Bloomberg Opinion. I'm a big fan of his daily note, and today is a very thoughtful note. And he basically leaves you with three messages. One is the fall in inflation is stalling. Two, if you look at the components, they suggest that it will continue to stall. And three is that if you look at the work that's being done in the different groups of economists within the Fed, they also confirm that we've got a 3% inflation rate. Now, as you know, I think the equilibrium inflation rate for this country is between 2.5 and 3. If you continue to target 2%, then you're going to have some really difficult choices, and I think that is what's facing the Fed right now.
Do you think they're also slowly realizing, Mohammed, with that in mind, that they're not actually as restrictive as they think they are? And are you seeing evidence of that start to creep into some of the speeches you're hearing from Fed officials?
Yeah, I think they're backing away from the view that they expressed in their last meeting. And I think that what we're getting is, you know what, maybe I can live with 2% plus for a while, because otherwise they are in a really difficult situation. Look, the market was relieved because the market didn't look at the fact that core inflation is stuck at 0.3 monthly for the third straight month. The market was worried that the numbers would be higher than the consensus forecast, and that didn't happen.
In the components, though, the BLS reported that over half of the inflation we saw, Mohammed, came from shelter prices raising. Claudia Sahm said we don't have an inflation problem now, we have a housing problem, and that's been true for over a year. We've seen the Fed cut rates and mortgages move higher. Mohammed, how do you solve an inflation problem if it's underpinned by a fickle housing market?
So I don't think that's the only issue, Danny, but it's an important issue. And again, I'll point you to John Author's note. You can tell I really like it because he does such good detailed work.
We love John too.
Where he looks at trimmed measures, where he looks at all that. The problem is services. And within services is wages. It's a good thing for the average American that real wages are growing by more than 1% now. That's a good thing, but it's feeding into services. And that's the big issue. And it's happening at a time when grocery inflation has come down a lot, where there are negative price increases for certain food items. And the concern is that services aren't going to come down fast enough inflation-wise before goods inflation starts going up.
Mohammed, if we're going to be in an environment where trade potentially is the priority of this White House, tariffs are put on, and American companies abroad are forced to come back, and they're forced to pay American workers, is this problem not going to get a whole lot worse?
Yeah, so I'm in the UK here, Danny, where everybody, the companies have found it totally normal to say, the minute my costs go up, I'm going to pass it on. And you hear that over and over again from companies in reaction to the budget. So there is this mentality right now in the corporate world that forget about your profits, forget about all the dividends and all the share buybacks you do. If your costs go up, then you should pass it on to the consumer. So there is that risk. But I want to stress that it's really hard to model what the president-elect's economic promises. First, you have to decide how many are going to be implemented. And then you have to decide the two counterforces. Yes, tariffs are inflationary. Yes, higher budget deficit will tend to put pressure. But on the other side, you have a major deregulation. And on the other side, you have a major promise to act on the expenditure side of the budget. So when you look at these two things, the first, even when you try to net it out, it's not clear. And then the second round effects get really complicated. And I tell people, regardless of what happens, we now have an inflation that's not going to go to 2%. Now, before you jump immediately to what's going to happen next, understand that you got to wait, because it's really complicated economics sorting all this out.
Mohammed, you have a new piece out today, and you say, once again, it was the economy stupid in Project Syndicate. And I think, and you can tell us here, are you trying to answer a question that our own colleague Craig Torres asked Jay Powell in the press conference, which was, did you learn anything about Americans think about the economy from the election results?
Yeah, and Marie, it's fascinating because there were two economic messages sent, and they're both correct. There was the one that the Republicans pounced on, repeating the 1980 Reagan question, are you better off? And they were talking about the price level. And people really still have sticker shock when they go to the grocery store. So that is what the average person focused on.
Well, you asked a question as well in your piece. Will the Democrats and establishment, in quotes you put experts, get the message? Will they?
Well, they haven't so far because they're focused on the economic exceptionalism, which is also true. But in a K-shaped economy, that doesn't trickle down as much as you'd like it to. So the Democrats stuck with the economic exceptionalism. They didn't understand that that message wasn't getting through for good reason, because people were concerned about the price level. And you know, Anne-Marie, that the more you tell somebody a message that doesn't speak to their reality, the more they question you, the more they lose trust in you. And the economists did a terrible job, the mainstream economists did a terrible job of trying to reconcile the two views, which are reconcilable. But unfortunately, the reality is that people will continue to focus on the price level because this has been such a large shock. We're not used to seeing inflation at 9%, which is where it was in June 2022, and that impact hasn't gone away.
Mohammed, what are your thoughts on the price action? Let's talk about that a little bit. Ahead of the election, you were looking at what was happening in the bond market and the high yields, and this line came up in your Bloomberg opinion column. While most analysts agree on the list of potential contributors to this unusual development, the Fed's cutting interest rates, yields are rising, there is little consensus on their relative importance. You went on to say that over the next week, we should get some clarity on that. Do you have clarity now on what is driving long rates?
I have more clarity on what's driving long rates, and it's exactly what you have been talking about. The market is front-running economic announcements, including who's going to be in Treasury, and that's going to be really important. And I agree with Anne-Marie earlier today, saying that that really matters. You see that the economy has continued to surprise on the upside, and that has had an impact. Meanwhile, in Europe, and I'm glad you've been focusing on the FX situation, things have gone in the opposite direction. John, the yield differential between 10-year treasuries and 10-year German government bonds, the Bunds, are back over 200 basis points. That's been a massive move, and the market has understood that divergence is a major story going forward.
Mohammed, how much more divergent could things possibly get? We've already seen aggressive widening over the past week. I was mentioning in a conversation earlier this morning that the front end, if you compare the German 2-year to the US 2-year, only back in September, that was trading around 130. Now it's up like 220. So almost a 100 basis point move on that spread, Mohammed. How much wider can things get?
I think they can get wider, John. I think, if you look at the good, the bad, and the ugly of the global economy, unfortunately, Europe is in the ugly. Cyclically, they're challenged. Secularly, they're challenged. There is no definitive political leadership in the two countries where you need it most, Germany and France. There's a roadmap, the Draghi report, but they're nowhere near even talking about implementation, let alone implementation. And these dynamics today mean that if you're lagging, you are likely to lag even more. So, John, it wouldn't surprise me if you see that differential go higher. It wouldn't surprise me if you see the euro go weaker.
So that makes it easier, relatively speaking, to call the ECB for 2025. They're going to cut interest rates. Mohammed, there is overwhelming consensus the Fed reduces rates again in December. I would love your base case for 2025 before we get to the end of the year, how you're thinking about how much work this Fed can actually do, and whether you think ultimately, just in terms of how the communication has evolved over the past few days, we're setting ourselves up for a pause into 25.
So first, I agree with you that we are likely to see another 25 basis points cut in December, and we should see another 25 basis point cut. Longer term, you know, the range, if you look at the dots of where's the terminal rate, we're from about 3.5 to just over, from 2.25 to just over 3.75. And I've argued it's towards the upper end. I suspect that now is about 4%. That is the terminal rate for where we're going. So we will have a couple more cuts, and then it gets really hard to cut more, unless you're willing to have the difficult discussions. And this is not a Fed that's willing to have a difficult discussion. This is a Fed that will continue to stand behind this notion of data dependency. And this is a Fed that may be bailed out on inflation by what's happening away from it, and bailed out in the wrong way, meaning that inflation doesn't go to 2%, and they'll just say it's not our fault.
Mohammed, I could talk to you all day. We all could. What do you mean by the difficult discussion? What is the discussion that you'd like the Federal Reserve to have as soon as today? What would you like to hear from Chairman Powell at 3 p.m. Eastern time that you're not expecting to hear?
So I'm definitely not expecting to hear the question, is 2% still the right inflation target? He's not going to touch this. Hopefully behind closed doors they are, because even if you don't want to change your inflation target, and they won't change the inflation target, the path to that really matters. So I'm hoping that they're having a discussion. What is the right neutral rate in this economy right now? What is the right inflation target? That discussion, if you had it without the historical context and without the legacy of having missed so badly on your inflation target since 2021, would be it's more between 2.5 and 3, and that's probably the range it should be. But that's not a discussion that he will ever have publicly, not this Fed.
Mohammed, it's good to hear from you, sir. Appreciate your time. Mohammed Al-Erin there of Queen's College, Cambridge. Thank you, sir. Mohammed mentioned John Author's column a few times in that conversation. You can find that on Bloomberg.com and, of course, on the Bloomberg terminal. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. Disney shares are rising in the pre-market, nearly 7%, after fourth quarter sales and profit beat Wall Street estimates. The star behind its solid results was the company's streaming business, with subscribers for Disney Plus climbing to over 158 million. Disney also saw strong growth from its film studio thanks to hits like Inside Out 2 and Deadpool and Wolverine. As for the outlook, Disney projecting double-digit profit increases both in 2026 and 2027, underscoring the turnaround efforts put in place by CEO Bob Iger. Meanwhile, Capri shares are lower in the pre-market, and Tapestry shares are rising some 6.6% after the fashion companies agreed to call off their merger. The $8.5 billion merger is set to end after a U.S. court froze the deal due to objections from antitrust regulators. Tapestry, the owner of the Coach and Kate Spade brands, had wanted to join forces with Capri, whose biggest brand is Michael Kors. But the FTC opposed the deal on grounds that it would harm competition in the market for accessible luxury handbags. And crypto predictions betting platform Polymarket is under investigation by the Department of Justice. Sources telling Bloomberg the platform allegedly accepted trades from U.S.-based users, which violates an agreement with the Commodity Futures Trading Commission. The FBI searched the company's CEO's apartment and seized his phone, this coming just over a week after the election betting platform successfully predicted President-elect Donald Trump's win. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes. Up next, the transition begins.
Looking forward to having a, like we said, smooth transition. Do everything we can to make sure you're accommodated.
I appreciate it very much. A transition that's so smooth, it'll be as smooth as it can get.
We all had the same question. Who lit that fire? We all want to know. What was that about? That conversation coming up in a moment. From New York, this is Bloomberg.
is on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Equity futures on the S&P 500 right now positive by 0.1%. Later